Yeah, Lindsay Piegza there of Stiefel. I feel like we've been saying that for 12 months.
Oh, I go 18.
At least a year.
At least a year. I go 18%. And you know, to be fair, it's easy to second guess people, but it's not that it's a wrong call. It's just getting the x-axis right. And it's brutal.
Isn't that always the case?
Well, yeah, but you know, it's going
to be a recession at some point.
It's out there somewhere, and I give Deutsche Bank immense credit for this. Deutsche Bank came right out of the blocks and said there's a recession, but it's out there somewhere, where others were gaming in short term.
Mike Gapen of Bank of America. So far, the Bank of America card data, they get this card data at BofA, point to a relatively benign consumption slowdown, a few signs of bank stress weighing on spending. Have we got this window then? Basically this window where the economy remains resilient still, and then out there somewhere is a slowdown. I won't name names, it's unfair. We all make bad calls, totally get it. But I do remember people who were sitting here saying that by the end of September, not this September, last September, the slowdown would be so obvious the Fed would have to pause. Here we are.
The problem is we don't really understand what's driving this inflation, right? We do understand some of the contours of it, but people underestimated just how much the stimulus was still sloshing around the system, how much consumers could keep spending. And oh yeah, by the way, they cleared out their credit deck, so now they can borrow more and they can keep spending. So how do you factor in, when does that impulse stop? When do they stop spending and stop saying YOLO? I mean, that's really essentially what happened.
Complete aside, but I do the technology overlay on credit. I do the technology overlay on credit. Do we really know what credit card dynamics is? I adore the Bank of America data. I think it's very valid, the MasterCard data with Michelle Meyer and others. But do we understand how people are borrowing now because of all these fintechy kind of things that are out there?
We've all got this faith in this slowdown at some point.
It's out there.
And it's not just the economists that have got that faith now. The policymakers too, the Federal Reserve, share the same faith. This came from Governor Jefferson, going into the weekend, and presumed future vice chair as well of the Federal Reserve. Disinflation in core goods prices is occurring at a slower pace than expected, but here we go. The full effects of our rapid tightening are still likely ahead of us. So they're starting to get comfortable with this idea that it's also, Lisa, on the horizon.
If you look at some of the granular data, it does show that there is a slowing. It's just happening really, really slowly. And the big question is, if it happens really slowly and companies are able to jack prices up, then all of a sudden are we getting people who are used to inflation? And that was the concern with the University of Michigan sentiment survey that came out on Friday. Are people sort of readjusting to this being the new normal? And that's a huge problem for the Federal Reserve. And that's the risk that perhaps is unspoken as often as it should at a time when the economy just isn't cracking.
It's a point, John, of 12 months, 18 months. On radio right now, folks, I'm looking at the TV screen, 4154. Did anyone think we'd be at 4154? Round it up, John, that's 4200.
TK, you've been great at this. A high nominal GDP world.
Yes.
That's what we've been fighting against.
Phil Carre, one of my heroes, the gentleman who founded Pioneer Company, knew my father, blah, blah, blah. The answer is Phil Carre said, nominal GDP and the inflation overlay it brings are bright lights, which makes everybody look good, everybody feel good. And that's what you have, is a feel good 5, 6, 7% nominal GDP. Is that coming down? But what's it coming down to?
Does this feel good?
This feels good. I think for a huge part of America, this is a golden time. There's another part that's flat on their backs.
If you listen on radio, based on Bramo's face, I don't think Bramo thinks this feels good.
Well, I just think that it's a challenge. And if you take a look at the sentiment, it actually cratered because of some of the concerns. I'm just saying it. I don't know. Does this...
Final word. You know when you're no longer at the Fed and you say what you think? Is the same true of United Airlines? When Oscar Munoz joins us in about an hour from now, the former United Airlines CEO, will he be open about the airline industry in a way that he wasn't when he was the CEO?
Can he get into the United Club?
Fantastic dovetail. That was
you see how long the lines are for the lounges at the airport?
Stand outside the United Club. I know Scott. Let me in.
Everyone's got access now.
Well, if you have an American Express card.
Yeah, you just need a card.
Yeah, exactly.
You just need a credit card. You spend a lot of money on it and you're in.
Yeah.
You're in. Never mind flying.
Well, you can't get in if you fly.
People just go to the airport to go to the club.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The political fate of Turkey's president hangs in the balance as he looks ahead for a runoff election in 2 weeks. Preliminary results show Recep Tayyip Erdogan with a lead of more than 2 million votes, which is not enough to avoid a second round. Now, that would pit him against opposition leader Kemal Kılıçdaroğlu. Erdogan has been in power for 2 decades. Ukraine's President Volodymyr Zelensky meets with UK Prime Minister Rishi Sunak today. The British government says it will be providing Ukraine with hundreds of air defense missiles and hundreds of new long-range attack drones. Over the weekend, Zelensky met separately with leaders of Germany and France. The European Commission has significantly raised its inflation outlook for Eurozone inflation. Now, it's forecasting consumer price growth at 5.8% this year and 2.8% in 2024. At the same time, economic growth forecasts also were increased. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
With inflation persisting, growth lagging, and personal household debts soaring, Thailand heads to the polls this Sunday. Bloomberg will be live in Bangkok with the election results and analysis you need. Live coverage continues right here on Bloomberg.
There are clearly some signs that the inflationary dynamic is beginning to change. From an overall level, it's moderating downwards from where we were a year ago, but inside that inflation, we're still seeing core inflation at too high a level. And I do believe that across 2023 and 2024, the ECB and governments can take the steps that are needed to get inflation back down to a level that it will not be the challenge that it is today.
That was the Eurogroup President, Pascal Donohoe, speaking to Maria Tadeo in Brussels earlier. We'll catch up with Maria in just a moment. Just in terms of the glide path for the rest of this week, you're going to look at retail sales tomorrow, then on to Target and Walmart earnings later on in the week as well. Looking at equity futures right now, no real drama here whatsoever. Positive 0.4% on the S&P 500. Hearing all the right things over the weekend from the National Economic Council Director, Lael Brainerd. The staff are engaged. I'd characterise the engagement as serious, constructive, referring to the staff-level talks around the debt ceiling. We'll get to the bigger, higher-level talks tomorrow between Speaker McCarthy and President Biden. Tom, those talks resume in about 24 hours.
Yeah, they resume in 24 hours, and it's staff level, right? Are they going to be fancy people sitting on a fancy couch in the Oval Office? I'm not sure.
Tomorrow?
Yeah, tomorrow.
I think that
That's
the heads
precisely
are
what we
going
get
to be
tomorrow,
doing.
isn't it?
The heavyweights show up?
And what's been going on is that the staff has been not sleeping and not going on vacation. And just to be clear, they are not leaving Washington, D.C. They'll be working around the clock.
Yeah.
They weren't bike riding over the weekend.
They were all missing family meetings and family events and missing Mother's Day as they worked through the clock, which is exactly what's happening until you have this sort of like grand meeting, fancy people in the Oval Office.
I mean, we'll have to see. I mean,
We're all excited, Tom.
How can you say that with a straight
No,
face?
I'm not.
You're not.
I am in the camp. It's going to happen. They're going to work it out. They're going to do it like they do in Brussels. That's what they're going to do. Joining us now from Brussels, Maria Tadeo here on a really odd Monday. I'm sure, Maria, it is the same for you as us. There's 8, 9, 10 stories. How confused is Brussels right now, and particularly with the overlay of a horrific battle in Ukraine?
Yes, Tom, and there's two big stories today. Funnily enough, we talk about the inflation problem. Obviously, we also had new projections from the euro area, higher inflation for longer now expected. But really, when you talk to officials today, they tell you they're focused on Turkey and they're focused on Ukraine. And remember, over the weekend, you had President Zelensky on a major diplomatic push. He was in Italy, he was in Germany. Yesterday, he was in France, and today he is in the UK. A lot of the focus here has to do with the counteroffensive. Tom, there's a lot of expectation, hope for the Ukrainians, but also remember, preparation for the NATO meeting in July. That is going to be incredibly important.
Maria, what is the significance? And I'm going to suggest it was buried over the weekend in the news, but nevertheless, Germany acted on funding Ukraine. Brief us on the importance of that event.
Tom, that's an excellent point, and I'm happy that you brought it forward and up on the show, because this was the biggest package that Germany has provided for Ukraine to date. It is 2.7 billion euros for fresh weapons for Ukraine. There are many ways that you can look at this. First of all, the language coming out of Olaf Scholz, completely different. This is a member of the SPD. Remember, a lot of the blame for that very tight relationship between Germany and Russia has fallen on the Social Democrats in Germany. That was a point of almost before and after moment where Olaf Scholz came out in Ukrainian and said, well, Slava Ukraini, the Ukrainians have to win this war, and we have the money to help you. That's on the political front. You have the tactical too. There's more weapons coming into this country, but also the symbolic nature of it. It does show, and it would show, that Germany is now willing to spend big with the shift in policy when it comes not just a relationship with Ukraine, but also Russia. And the words of President Zelensky too, he said Germany is a good friend of Ukraine. We can rely on Germany, and it's going to be now the second biggest contributor to Ukraine.
And I believe that Vladimir Zelensky is actually headed over to London next, the UK being the next potential donor to the effort. There has been a shift over the past few days. We've seen reports about Ukraine shooting down a fighter jet that belonged to Russia. We've talked about we've heard about them reclaiming certain territories that had been occupied by Russia. The people who you speak to, does it feel like there is a tipping point going on in what otherwise has been just sheer drudgery and a tragedy, frankly?
Look, the people that I speak to, what they say is at this point you have to be very careful, because the Ukrainians will say one thing, but obviously the Russians will then point to another piece of information. What they take away from it is that the situation on the ground must be heated. Again, when you look at this counteroffensive, everyone is watching for this. A lot of the ideas to whether or not Ukraine can be successful will depend on this counteroffensive. And on that note, I would really point to this interview on Saturday on Italian TV of all places, on Rai, that is the state TV in Italy, where President Zelensky repeated, this is not the time to talk with Vladimir Putin. There is nothing to talk with the Russian president. The focus on Ukraine is a counteroffensive, and to get to peace, we need to have a successful counteroffensive.
Turkey has been a key broker in a range of things over the last 12 months, Maria, as you know. In Brussels at the moment, can you tell us how they're responding to the election that took place over the weekend, the potential runoff that we're set to see in the next couple of weeks?
This one is one that they watch very closely, because remember, this is at times a partner to the EU, but we know there has been tensions, particularly with some members of the EU. You know, there's tensions that flare up between the Greeks and the Turks at times. So this is a crucial relationship on many fronts. You talk about the war, you talk about the grain deal that Erdogan was able to broker, but we know at times there are tensions when it comes to Turkey's role in NATO. Remember the weapons that they bought from the Russians, this idea that they try to play it to waste, but they were instrumental when it comes to the grain deal, and they are, whether the Europeans like it or not, instrumental when it comes to migration. When you listen to von der Leyen, she just gave a press conference about 20 minutes ago. She said this is a crucial election. We closely keep an eye on it, and everything is still open, according to the head of the European Commission.
Maria, wonderful to get your perspective. Thank you. Thank you very much. Erdogan, Tom, toughest test in 2 decades, according to so many people that know this area of the world better than we do.
And what's important here is the length of duration. Can you imagine a U.S. president or an English prime minister moving out for 11 years, 20 years. The length, the duration's exhausting.
20 years.
I don't care who it is, it's 20 years. And I have spent a fair amount of time in Istanbul in early Erdogan, and this is not the same
Well, that was different.
as early Erdogan. It's way, I don't think the West, a lot of people, listeners, viewers understand it's completely different Turkey now than it was in 2005, say.
The implications for NATO and the implications for the broader region are quite significant, because all of a sudden, if you have a new leader in Turkey who is much less authoritarian and more willing to sort of bring Turkey into the fold of the European Union, perhaps opening up the idea of NATO to Ukraine, having a more cohesive relationship with some of the allies, to me would be a game changer. A lot of people are looking at that as a potential key point, especially given that people are revolting, given the fact that the economy hasn't been doing so well.
From a market standpoint, just finally, Tom, I think the one thing we're all waiting for is whether you get the return of monetary policy orthodoxy, because let's just say things have been unorthodox over in Turkey for a while on that front. Tom, I know you're focused on this one headline that we got from Argentina over the weekend. You want to talk about monetary policy orthodoxy. They're set to raise the key interest rate by 600 basis points to 97% today. That's pretty phenomenal stuff.
I can give you the exact number, John. I'm going to look at the Bloomberg terminal, and I've got 4,900 charts on the Bloomberg terminal. The most emotional chart is Argentina, and it's real simple here. Argentina peso at a 229. Black market reaches out approaching 500 pesos. And if you look at that with some fancy mathematics, it's beyond ugly, it's sustained ugly, and over the weekend, maybe they're finally going to confront this.
Inflation, 109%, just to give you some perspective of what would sort of prompt this dramatic move. Is this a sign that monetary policy doesn't work at a certain point? Can we just say that? You can't really fight 109% inflation by jacking up the interest rate by 600 basis points, because guess what? People aren't even using the currency anymore. They're just simply leaving with respect to the monetary structure and using dollars. To your point, the black market.
The black market down there is profound, the so-called blue dollar. And thank you, Patrick Gillespie in Buenos Aires, for your help here with Bloomberg News. At the IMF meetings, in the blur, one bar chart which showed here's how much Kristalina Georgieva has given Argentina, and here's how much she's given everybody else. And it's stunning how much has been given to Argentina to help them with this mess.
We usually laugh off the I word, but I think what happens in Argentina is often deeply idiosyncratic. Tom,
I agree. And culturally as well, going back to
just keep doing this
middle of the 20th century. I have been told, I'm an amateur at this big time, and I've been told by others, yes, John, it is cultural.
Well, and there's this question of, well, at what point do you get fiscal discipline if nobody believes you and will lend you anyway? I mean, that's really the issue, right? Because
wasn't there a century bond not too long ago in Argentina?
Yeah, I remember that.
What was that?
It was the era where no one could default, and it was free money forever.
Amazing. I don't know if it was that, I just think it was, I'll hold it now, but ultimately I'll get rid of it to someone else at a better price.
There's a theory that longer term is better because they're going to pay eventually because someone will help them, but the short term is actually more difficult because they're probably not going to get paid them back in the short term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years. Or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. We started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And frankly, when people leave 23andMe, I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
I think the rate hikes from last November haven't even really hit the economy.
What's going to have to happen for them to actually cut rates is going to be to start to see cracks in the labor market.
For me, the labor market's really key, and the rebalancing that we're seeing there, I think is very encouraging.
We know the risk of recession is high, but we're not seeing the whites of the eyes of it in hard data.
We're not going back to a world that we struggle to get 2% inflation. If we get to 3%, we're lucky.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market positive 0.4% this week. Retail sales tomorrow. Earnings from Target and Walmart on to Friday, Tom. We hear from Chairman Powell and Ben Bernanke, actually, a little bit later this week.
We're going to talk about Powell Bernanke. That's actually an important conversation, and there's a whole economic history to it. What I would suggest, John, is the last hour was the clumsiest hour we've had in about 8 months. And we're going to straighten it out right now on radio and television. We have a guest coming up to talk about how narrow the markets are, and that's this oddity of this May 2023.
Stuart Kaiser of Citi going over the performance of the last 3 months, Lisa. The S&P 500 over the last 3 months up 1%, the Nasdaq up 8%, the Russell down 11%. And if you want to go deeper than that, the regionals last week, the regional banks got hammered. The regional banks were down by more than 6%, and the S&P 500 held up pretty well with that as the backdrop.
Stuart, I can't tell you how excited I am to talk with him because he put out this one aspect where it's basically saying on a volatility versus the range kind of basis, it has been one of the most painful periods of time for traders going back to 1980. And to me, this really highlights the angst that we keep feeling as everyone talks about the pain of a range that doesn't seem to make
Talk about
sense.
The pain of the range. AC Milan plays tomorrow in Inter Milan. And do you watch or what do you do?
Well, I just want to say, we're being so nice to our next guest because he brought us in gifts.
On radio,
no Pirlo, no party.
Who's Pirlo?
And, oh my goodness, who's Pirlo?
You're going to be wearing the T-shirt, you know that, right?
Who's Pirlo?
It doesn't fit.
Andrea Pirlo. Oh, okay. Young man comes out of Brescia in a youth team. The whole of Italy knows who he is. He's the future of Italian football. Goes to Inter Milan from Brescia. Doesn't do so well. Goes on loan a couple of times. Then AC Milan get hold of this player. And Carlo Ancelotti repositions him as a deep-lying playmaker just in front of the back four. Changes the game. They play in this beautiful diamond and dominate European football for much of the next decade. Goes on to win the World Cup with Italy. Writes in his biography, Tom, great book, you should read it, that he doesn't feel stress at all. He woke up in the morning, he played the PlayStation, went out in the afternoon and won the World Cup.
That's what Bramo does.
There we go. And Dreb, who's Pirlo? Who's Pirlo? Pirlo's a god, Tom, of Italian football, global football.
Thanks. This is going down in flames.
Stuart Kaiser, welcome to the show. We'll get to you in a moment, Stuart. I've got to get to the price section. You thought the last hour was bad. Wait for this hour. On the S&P 500, up by 0.4%. Yields look like this in the bond market. Lisa, keep it together. Yields up a couple of basis points. 10 years. 348.50.
And here's where the energy comes tonight. 8:30 a.m. U.S. Empire Manufacturing Survey. There is some data coming out, and this is ahead of the retail sales that we get tomorrow, and then throughout the rest of the week, and the specific names that are going to be reporting. I'm very curious to see whether we see any kind of rolling over, as some of the surprises haven't been as positive over the past few days. 11 a.m. we get the New York Fed releasing the first quarter 2023 household debt and credit report. The key here is credit card receivables. How much are credit card outstandings increasing as people fuel their expenditures with debt? This is something that they have a lot of room to do because they cleared the balance sheets, but how much can they keep doing it? And at 2 p.m., we hear from Atlanta Fed President Raphael Bostic. He is going to be speaking with our own Michael McKee down in Amelia Island, where they're having their conference, which is going to talk all about kind of the road ahead and parse through a lot of academic papers.
Very cool. Looking forward to it. Stuart Kaiser of Citi, an official welcome to the program. Stuart, how are you? Thanks for being with us, and thank you for the merch. We appreciate it. Let's just start with your note that came out yesterday evening, and just begin with the performance you went through. Equal weight S&P, the NASDAQ, the headline S&P 500, the Russell. What do all those different performance figures over the last 3 months tell you? What's the overarching story?
I think it tells you people are just pretty conservatively positioned, frankly. It's large cap tech leadership, high quality stocks, low risk stocks that are really driving the market higher. And that just tells you, that people, if they're going to be in equity markets, need to have a reason to be. So you need a story or a theme or a high-quality stock that gets you out of a 5% cash yield into an equity market that's been highly volatile.
I looked on a log SPX, and I noticed 3 moving averages I use have converged to 0.00%, 0.0024% of the S&P 500. You call it home on the painful range. What's the history to identify which way you go to get out of a painful range?
I think it's a great question, Tom, especially right now, because it does feel like we're sort of bracketed in, where we are right now. When you get up to that sort of 4,200 range, you kind of run into a valuation friction where people aren't, comfortable owning equities at that level, particularly when they're clipping a 5% coupon in cash. And to the downside, we're conservatively positioned, as I mentioned. Mutual funds are very low beta, and expectations are so low right now that it's kind of hard to surprise people, to the downside. So, in terms of breaking out of this range, I think, to the upside, it's going to have to be positioning driven. Maybe people get the follow the Fed mentality and you get a bit of a positioning, squeeze to the upside. And to the downside, frankly, I think it's U.S. growth and it's the debt ceiling. The debt ceiling is more tactical, and the U.S. growth data, I think, would really need to fall apart in pretty aggressive fashion, but I think that's what can break you out to the downside right now.
Before we get into some of those scenarios and the analysis that comes with it, I want to just sit on this range, and you talk about how, if you look at one measure, it's the most painful range going back to 1980, or one of them. Can you talk about what the incentive is for anyone to do anything other than just sit in cash and get 5% if you're not going to get rewarded, and the likelihood of getting, your face ripped off is pretty high?
Look, I think that's one of the big challenges, right? I mean, if you look at it, we did a quick survey of our investors, and 2/3 of people said they wouldn't put money into equity markets unless they had 10% or more potential upside, right? So to get people in the market, you really need to offer them something. And so I think, that's why we run into this valuation limit around 4,200, because you add 10% to 4,200, all of a sudden you're at 4,600, and a lot of people aren't kind of comfortable with, with that type of upside level. So yeah, we're kind of bouncing into a ceiling and a floor, effectively. And to Tom's point, it's really narrowed all of these technicals, which you could argue creates kind of a very uncomfortable moment for markets.
If there is more stability in the bond market, which we've seen, will that give the catalyst, sort of the ability for stocks to find some sort of direction that has a little bit more conviction behind it?
Definitely, Lisa. I think that's actually been a big contributor this year. If you look at, bond volatility and also the volatility of economic data itself, that stuff has really started to narrow. I think it's made the market more investable. As I mentioned, it's hard to surprise people. I mean, after what happened last year, it's kind of hard to come out with something really surprising. So yeah, I think bond volatility coming in, a clearer path, to Fed funds and inflation gives people more confidence to be in markets. But I think that's what got us from 3,800 to 4,200. What gets us that next step, I think, is the bigger question.
John Stolfus just publishes at OPCO, the same as Stuart Kaiser, the same as Goldman Sachs. The idea, once again, earnings have surprised people. Everybody had a gloom framework. Guess what? It didn't happen.
Stuart, you mentioned the tactical call around the debt ceiling and then talked about the longer time horizon. Does one inform the other? Does the debt ceiling negotiations ultimately mean slower growth in our future?
I think only if it really disrupts financial markets from here, I think. I think, if this was something persistent that kind of impacted government spending and activity, then yeah, I think that would increase your recession risks. If this is more of a 1 to 2 week, just kind of choppy market scenario, I don't think it'll have a huge impact on the growth outlook. I think the big wild card in the growth outlook is the credit channel. Did we really disrupt lending or not? And I think that's why people are a little bit sort of on edge, particularly because the Fed doesn't control the lending channel, right? So if that tightens meaningfully, it's sort of outside of the Fed's control, and you could actually get an over-tightening that the Fed didn't really want initially.
Can our radio and TV listeners, should they and how should they own shares of Apple Computer? How do you comfortably own something that elevated, that dominant?
I think Apple and call it the big sort of 5 to 10 stocks in the market are giving people a lot of angst just for that reason. I mean, if you're in Apple right now, I think it's A, because you love the products, and B, because they probably have negative net debt on balance sheet and relatively strong earnings growth. So I think if you're in those stocks, it's because it's something you're comfortable owning. If you look at year to date, we've seen basically inflow into 3 sectors. Healthcare, industrials, and tech. And I think you would argue both industrials and tech have really strong kind of investment thematics behind them that people are like comfortable owning despite recessionary risk. So yeah, I think if you're in Apple, it's because you believe in kind of the medium to long-term trend of the stock, and in the near term, you're comfortable based on kind of the size and quality.
And how do you adapt to the zeitgeist, which shows everybody's scared stiff? Any number of different, John, you know the metrics better than me, but the answer is everybody's scared stiff. How do you adapt to that?
Well, I think the scared stiff is why cash positions are high. It's why mutual fund betas are low. So I think to me what that's actually done is it's raised the floor to the market a little bit because there's not much left to sell. But yeah, I mean this is the big question: is how do you tempt people out of, to your point, high yield bond market, higher yielding cash markets into equity markets? And I think the answer there is you need to have a single stock story. You need to have like a macro thematic like the Inflation Reduction Act creating a huge amount of spending. Or you need the Fed to stop and to get this kind of FOMO, follow the Fed rally. That's not our base case, nor something we necessarily endorse, but it's certainly something that I think people are teeing themselves up for.
Your point on the credit channel is so important. We either find out the Fed's over-tightened or under-tightened based on what develops there, don't we? Is it that simple?
I think so. I mean, what we've said, everybody's saying, oh, this is great news. The market's going to do some of the tightening for the Fed. We actually kind of disagree with that. I think if you thought the Fed needed to do 10 units of tightening, and now they're going to do 8 and outsource 2 to the market, well, they don't control that 2, right? That 2 could be 0, it could be 6. So from our perspective, it actually adds more uncertainty to the growth outlook that you're, quote unquote, allowing the market or getting help from the market to do the tightening. So I actually think what that's done is it's helped the rate aspect of it, but it's actually added more uncertainty to the growth aspect, in my opinion.
Seth Carpenter of Morgan Stanley said a similar thing. He said the calibration of all of this gets so much harder when you outsource it to the credit channel in the way that it has been done because of the banking stress of the last couple of months. Stuart, this was fun. This was great. Let's do it again. More T-shirts. Love that.
Thanks to the merch. Seriously, but
next time we'll that story again.
I think I can speak for Lisa as well. We wake up every morning, and the foreignness of this, John, every day I learn something. I had no idea who Pirlo was.
Oh,
I had no clue. And this guy was sold to AC Milan a long time ago for 33 billion Italian lira. That's a lot of money. It's $17 million a million years ago.
So one thing that we did at Milan, we let him go to Juventus. Should never have done it. And it was a miserable period for me watching Juventus do well. He's retired now, Tom.
But is he coaching or is he like...
No. He was coaching Juve. Lasted not too long. Didn't go so well.
Oh, okay.
There were some thoughts that maybe they should have stuck with him. We should get him on the show, Tom.
Lisa, every day
he played in New York once upon a time.
It's just awesome.
He did?
He did. He did. We'll get him on the programme, Tom. It's a great painting of him down in Soho on one of the walls. I'll share that with you, TK. I've got a photo. Stuart, this was great.
Oh, it's next to Glossier.
I said how great Stuart is.
He is great. That was really
next
fun.
to Glossier downtown.
It's somewhere near Glossier. Greg Valliere of AGF Investments on a debt ceiling without the T-shirts is going to be joining us shortly from New York. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden and House Speaker Kevin McCarthy meet again this week to try to break the impasse over raising the debt ceiling. Other congressional leaders will also take part in Tuesday's meeting. Now, if the borrowing limit isn't raised, the U.S. could default on its debt. McCarthy has said any change to the limit is contingent on a budget deal. In Turkey, there could be a runoff in an election that's testing President Recep Tayyip Erdogan's 2 decades in power. Preliminary results show Erdogan with a lead of more than 2 million votes, but that's not enough to avoid a second round of voting. A runoff would pit Erdogan against Kemal Kılıçdaroğlu, which has the backing of the nation's broadest ever grouping of opposition parties. In Thailand, a big victory for pro-democracy parties in Sunday's parliamentary elections, and that sets up the biggest challenge to the royalist-backed establishment since the military seized power in a coup nearly a decade ago. The Move Forward Party wants to change a law that restricts criticism of Thailand's powerful monarchy. A big transaction in the oil pipeline business. ONEOK has agreed to buy Magellan Midstream Partners in an $18.8 billion cash and stock deal. It would create one of the largest oil and natural gas pipeline operations in the U.S. That price represents a 22% premium to Magellan's closing price on Friday. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
Reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. The Fed coverage you're looking for. Today, Bloomberg's Mike McKee sits down with Atlanta Fed President Raphael Bostic.
There are just a lot of things to reflect on in terms of where the economy is.
Then on Tuesday, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook.
And an interview with Chicago Fed President Austin Goolsbee.
We should gather further data.
It all starts today, right here on Bloomberg, your global business authority.
The staff is very engaged. I would characterize the engagement as serious, as constructive. When I talk to CEOs, to business leaders around the country, they tell me things are actually going very well. But their biggest concern is that Congress might fail to prevent default, and that would be catastrophic.
A new role for Lael Brainerd, the director of the National Economic Council. Of course, she was the vice chair of the Federal Reserve, speaking on CBS's Face the Nation over the weekend, saying that talks were ongoing, some at a staff level, they were constructive. Then it's on to tomorrow between Speaker McCarthy and the president.
Can you imagine someone that able going into a room and saying, okay, this is the way you speak as a vice chair. Now, these are the 10 key words to say repeatedly as the NEC head. I mean, what a shift in cadence to see there.
Well, if you want to talk to anyone about a shift in cadence, talk to former chair Jan and Tom about how things are going running the Treasury. just a different beast.
It really is. And for our international audience, the tradition of the Secretary of Treasury, really going back forever, has been it's some corporate type. It's a suit and tie, a corporate business type. And then there's a PhD economist who owns labor economics. So that's where we are on that. It is a Washington that we're spinning our head on. John, notice a 2-year yield, 4.01% right now.
I just wanted to say that Stuart Kaiser at Citi was great in the last segment. Also reliably informed that Pirlo is now at a Turkish club managing.
Oh,
so
okay.
There you go.
Okay, thank you.
Ties into the day's news.
Anytime. Exactly, if you want to talk about
that was the reason why we
he could
had
probably make an election.
Precisely why we shifted towards Pirlo.
Make an election appearance there. And with the tension of the Turkish election, he could make an appearance for one of the candidates.
We could get some commentary from an athlete.
I think
on
it says a
very
road
serious.
trip.
That sounds like a different network.
Saving us is Greg Vallier, Chief U.S. Policy Strategist at AGF Investments, who briefs us on Washington this morning. Greg, you and I within the 5-6 stories, and yes, Dr. Brainerd talking there about the debt ceiling. You and I were looking at Ukraine in maybe the most important week for Mr. Putin since February of a year ago. Putin's fighting his military. Putin is fighting the so-called mercenaries assisting him. And it's all happening at a battle which feels like the Battle of the Bulge in World War II.
It's quite a story, Tom. This weekend, Zelensky got assurances of more military aid from Western Europe. As you say, he's fighting with the Wagner mercenaries. But I think the big story is Bakhmut, which is this horrible, bloody fighting that's gone on for months, I think is now leading to some advances by the Ukrainian forces. What struck me over the weekend, Tom, was film of Russian soldiers fleeing, maybe like 1917, 1918, when they fled Europe at the end of World War I. If the Russian troops are fleeing, that's a really dramatic story.
Bring it back to domestic politics here, in that there is a theme of for Ukraine against Ukraine. Is that an election issue, or does that drift away towards November of 2024?
It's a long way away, obviously, and Trump inflamed things on many fronts in the CNN interview. But one of the things Trump inflamed on was, of course, his lack of support for Ukraine. I think that will run into significant resistance among most Republicans.
Greg, I just want to build on what you were talking about, that this could be one of the most significant developments, the most important stories out there, if Russian troops really are abandoning ship. Do you feel like there has been a material shift in this war where Ukraine is making headway that perhaps is underappreciated in the market?
Could be. Hard to say. What's the old saying? The first casualty of war is the truth. So it's hard to say who's telling the truth. But I do sense a dramatic drop of morale, not just in the mercenaries from Wagner, but I think among Russian troops in general.
We're going to be watching this really closely, especially given the potential shift over in Turkey and what that means for Ukraine's potential NATO membership. Back in the U.S., we have been talking about the debt ceiling limit, and I know that people don't really want to talk about it because there's not really a new angle on it. But what do you make of this timeline that we have where President Biden has to get something together before he heads off to G7, and we're kind of shifting forward the time frame based on a lack of tax receipts received by the U.S. government?
Well, I tell you, Lisa, there's a risk of a fake out here, of getting too optimistic. Everybody this morning is saying they had a good weekend. I think there is agreement on certain big concepts like cap on spending, clawing back some money from COVID. That's encouraging to see. But these are complicated issues that could take weeks to fully resolve. So I think that there won't be a deal on Tuesday. That's out of the question. Maybe a comment that they're getting closer, but after Biden comes back from his Asian trip, it could still take a few weeks to iron out all the details. Therefore, I think they have to have an extension.
Just as one example, Greg, away from the public program, Social Security and all that everybody's focused on, what does all this ballet mean for the Pentagon?
I think they're still going to get an increase. You know, they got almost 10% in this new fiscal year that started on October 1. I don't think they're going to get 10% in the next year's budget, maybe 5 or 6%, but I don't see them getting a big haircut. And one of the reasons, of course, is Biden's desire to spend more money on Ukraine.
Well, it seems to be everybody's desire to spend it, and yet there's this narrow part of, I'm going to say, a Republican Party, maybe joined by the left as well, that wants to be isolationist. I mean, we've dealt with this for our entire lives. Does it ever get any traction in America, witnessed through the Pentagon budget?
I think the center holds on this. You've got a lot of Republicans, not just Lindsey Graham and Mitt Romney. You've got a lot of Republicans who want to keep up the defense spending, and with Joe Biden, enough Democrats. So I think the center holds on this issue.
Greg, we're all trying to work out where the spending cuts might come from to make a forecast on what the economy might look like. Greg, have you got any kind of base case whatsoever on where they might come from, how big they might be, and what it might mean for growth?
Yeah, John, I think you're going to see a cap on spending. I think that's very likely. They're just arguing over how much. Is it 2%, 4%, or is it zero? I don't think it's going to be zero. There will be some kind of a cap. They'll claw back on COVID aid. There are several other things that are on the table now, including if you want food stamps or federal benefits, you have to be willing to work. So I think you get it. Overall, for the macro economy, I think it will be a slight headwind.
Greg Valliere of AGF Investments. Greg, thank you. All of that dependent, Tom, of course, on how long this goes on for.
Well, it's year 2. This is really important. And that in any war, there's the first 3 months, 6 months, and everybody's got a theory. And then the theory drifts away. And now we're what? March, February 2, add for 14 months into this, I'm going to say. And all of a sudden, the theories are drifting away, and it's just ugly.
Can I share this story from the Journal this morning? Really interesting read for a lot of people here in the United States. The Biden administration is considering creating a government-run alternative to TurboTax, Tom, drawing resistance from Republicans and companies fearing a loss of business. This story goes on to say, Democrats and consumer advocates have been pushing for the Internal Revenue Service to offer free online tax filing on its website, particularly for people with straightforward returns. Their core argument, tax preparation companies charge middle-income Americans for what advocates think should be a free public service. Didn't we talk about this literally 2 weeks ago, 3 weeks ago?
Yes, I might use TurboTax myself.
But do you not think that they are going in the right direction? Doesn't that make sense? Shouldn't the IRS just be telling us what we owe, and then if you want to have some kind of deductions off the back, then you should do the hard work to get those deductions?
Do you think they're actually just going to give you a sheet and be like, sign here, and then this is what you they're not going to do it for you. That's the problem.
I don't know what they're going to do. I'm just suggesting what they perhaps should do.
Right, and then basically you could have a template, and if they give you the wrong numbers, well, then that's the IRS giving you the wrong numbers. So, you know, what are they going to do, audit themselves?
I would suggest there are 2 halves in America. There is a have that is very documented, you know, it's really cookie cutter and all that, John, which is comfortable for this idea. And there's a whole nother have led by people with more opaque, less identifiable income and expenses, and hugely represented by not only Republicans, but Democrats, but particularly Republicans. And they're like, no, we don't want to change it. And that's all there is to it.
There's some companies that have an interest in not changing it.
Couple.
Either.
I went through the exercise.
Make a lot of money.
How far back do you keep your
I know.
taxes? How far back do you keep your taxes?
It's meant to be 5 years, isn't it?
7 years, 10 years? I don't know. I'm shredding them this weekend. I got the shredder going with vet bill.
From 7 years ago?
Yeah.
I have it all online.
I have no idea what's in my tax forms. It's like that thick, and I don't have a clue what's in there.
big ideas. We show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Lisa, just preparing some single name stories for you. I'll give you the top line stuff in the equity market at the moment on the S&P 500, positive by 0.35% on the S&P. Retail sales tomorrow, Target the day after. You get Walmart on Thursday. Look out for all of that on the NASDAQ, positive 0.3%. Interesting mix on the S&P 500 versus, say, the regional banks. Regional banks hammered last week, down by more than 6% on the KRX index, much followed, of course, over the last couple of months. The S&P 500 just about negative by 0.3% and looking to erase some of that early this morning. In the bond market, you mentioned a 2-year, Tom. Yields up, back through 4, up a basis point, 4% again on a 2-year.
Swinging away in a tight range, as Stuart Kaiser calls it, a painful range. Joe Light over at Barron's. John, I know you read Barron's cover to cover every week. He's calling it Merger Monday. I mean, that's where we are. It's been underplayed with all the other news going on, Turkey, da-da-da-da. But guess what? It is I got $39 billion.
Gold miners at the epicenter of some of that, Bramo. Was it Newmont, Newcrest in the mix?
That's right. Newmont agreeing to purchase Newcrest. And you can see those shares are just not really doing that much, gaining about 0.8%. We'll get to that in 1 second. I want to go back to the story that you mentioned, the Wall Street Journal story, talking about how the IRS could be considering creating its own tax service. Not a lot of details in terms of what this would entail, but it would eviscerate the business models of some of the tax preparation companies. I think of H&R Block, as well as Intuit, which is one of the online providers of this program. How much could this make it really easier and annihilate these business models without some lawsuits? I think this is actually a fascinating case. And would they basically take the liability of a bad preparation on their books? This is interesting to me. 8.7% decline for H&R Block and a 4.5% for Intuit. And you were talking about the Newmont, Newcrest kind of tie-up. I have to think scale matters, which is what you guys were talking about, 0.8% gain here. How much is this going to be what we're going to be seeing on an ongoing basis as it makes more and more sense?
Saw it with Barrick and Randgold a couple of years back. Unsurprising we're seeing it here. From what I understand from a lot of people who follow this stuff closely over in London and the city, Tom, because mining's so big over there. Of course, this is all about not just scale, but obviously getting exposure to copper, which is the energy transition trade as well, and that's what Newcrest offers to Newmont.
It's a $19.2 billion deal. It is the Australian rival, the tie-up here happening. And this is really going to be an interesting deal because this is the biggest bullion producer now in the world.
I think this size and the scale, I believe these two transactions, the one in natural gas this morning as well, one is like $30 billion plus, is the same of a small business on 3rd Avenue. Money costs something now. Doesn't matter if you're running your small business off a charge card on 3rd Avenue or you're doing the kind of mega trades we're talking about. It's all the same.
Just a final word on the tax filing story as well, Tom. This is a great example of why people get so frustrated with Washington, D.C., is that this is not the first time you've seen a proposal like this, and yet these things often don't happen because the lobbyists step in and the companies don't want them to happen. And I think that's just a great shame, that you can have something that's going to benefit a big, big part of society every single year in a major way, and yet it's not going to happen because you get these companies out that don't want it to happen and can lean on politicians in Washington to make sure it doesn't.
I will reserve judgment before I see them come in, but that's exactly what you would expect them to do, because basically you'll have these big businesses that will just essentially not have a business model unless they provide some other service. But to your point, why can't we just do that? Press a button, you pay your taxes, you're done.
It should be much easier. It should be much easier.
The heritage of the country, and John, as you've mentioned before, I think it's a little bit easier in the United Kingdom to say the least. We need to recalibrate here in the middle of May. We do that with Gene Tenuzzo now, Global Head of Fixed Income, Columbia Threadneedle. Gene, thank you so much for recalibrating with us this morning. How much cash do you have right now? Are you in love with cash at 4.43%?
Well, if we look at the bond market right now, Tom, cash is our biggest competitor, right? You know, you look at 5% deposit yields, and that's a tough customer relative to what we can get in the bond market and a 3.5% 10-year. But we would argue that there's still a very compelling argument to be invested in the bond market. But if you look at the summer, what's ahead of us in terms of the banking malaise and the debt ceiling, we are holding a little bit more cash than we have been by a couple percentage points across most portfolios.
Is an institutional certitude, the duration, the length of maturity of an institutional portfolio is much shorter than what retail does? Is retail making a big mistake now out at, say, 7 years, 10-year, dare I say 15-year duration? Those are the old habits of another time?
Well, I think retail is doing exactly, acting very rationally and taking advantage of much higher yields that they aren't able to get in checkable deposits, which have been at 0% and remain quite low. So they're taking money and putting it in CDs and short-term interest-bearing money market type funds at a 5% yield or so. But what they're forgetting is reinvestment risk. And I think it's going to become very important that, over the next couple of years, rates may not stay here for a long period of time. And eventually, as they migrate lower, you're going to want to lock in longer-term yields in longer-term assets.
Jane, over in the equity space, we were speaking with Stuart Kaiser of Citigroup, and he was talking about this painful trading range that has really just paired a toxic combination of both volatility and big whipsaw swings in equity valuations. Are you seeing the same kind of painful trading ranges in certain fixed income instruments, or is it much more reliable, much more consistent, and actually getting much less volatile than it has been over the past 12 months?
Well, we have seen a pretty wide trading range with more volatility actually at the front end of the curve, but we're also seeing more volatility within corporate credit where that dispersion is getting much larger than it was last year. To us, that might actually be the most important story of the year, Lisa, so far. Last year, it didn't matter if you were in treasuries, investment grade credit, municipal bonds, or high yield, they were all down somewhere around 15%. This year, what we're seeing is that companies with better balance sheets are performing better. If you see what's going on with the banks, the weaker hands are certainly performing more poorly, and we're seeing that differentiation. I think, trying to be able to capture that is really the mission of the year.
So there's this debate right now, and Torsten Slok of Apollo just put out some decks basically saying high yield spreads are way too tight. They should be much wider, basically a view that there should be greater credit deterioration going forward. Other people have made the same claim. This sort of sanguine feeling in bonds doesn't reflect some of the angst that you're seeing elsewhere in markets. Do you still think that credit is the smart area of markets, that is the area that's sort of the tea leaf for what's to come? And it seems pretty optimistic.
Actually, I think that's not the correct read. I think overall there are opportunities in credit. If I look at the investment grade index at 145 basis points over treasuries, that's cheaper than its long-term average at a time when leverage on company balance sheets is lower than it was before COVID. If you look at the high yield market, yes, I think spreads could go a little bit wider, but it's important to remember that that's a much higher quality asset class than it was a few years ago, because we have a lot of those fallen angels, those higher quality, previously investment grade companies that are now in the high yield market. And the lower end of the high yield market, a lot of that has gotten a lot smaller because the lower quality, highly levered issuers have gone to the private credit market. So the high yield market as it stands today with its current composition, I think is probably fairly priced to maybe just slightly rich.
So, Gene, do you think that perhaps people are overplaying this idea of broader credit tightening in markets if you're not seeing the stress in some of the riskier companies, if you're not seeing stress in the consumer, and if you're not seeing stress with a whole host of other relative valuations across the market?
No, I think the stress is there, but you have to find it. I think it exists in private credit. It exists in the banking sector, particularly at the smaller and mid-tier banks. It definitely exists in the commercial real estate market. We're seeing that also impact the regional banks, but also something that's impacting the CMBS market. So the stress is there. It's just perhaps not in the exact same pattern that we may have seen in previous cycles.
Gene, Howard Marks over the weekend of Oaktree out with the FT talking about the private markets of debt. The general phrase here, folks, is private credit. He's really worried about some of the opaqueness there. From where you sit with huge institutional responsibility, do you have a clear view of what private credit's doing?
Certainly don't have the visibility that we have in the public credit markets, Tom, and that's one of the things that makes you nervous. I think the sell for private credit is largely that, look, we can get you a couple more percentage points of yield relative to public market high yield bonds, and you don't have to market to market. A couple of years ago, when the high yield bond market was yielding 3.5%, and you could get 5.5 or 6 in private credit, that was almost double, and it was pretty attractive. But as you look at it today, particularly most of the private credit market is floating rate. So with SOFR above 5%, you're looking at, double-digit borrowing costs for a lot of these companies, and that's becoming harder for the companies to bear and going to push the default rates a lot higher there.
When do we see that? Do you have a calendar item on that? I don't mean to the week or the day, but can you give us an idea of when we see private credit begin to work out off of that changeable yield, that floating rate structure?
I think it's starting to happen, and the observable way we can see it is in the public leverage loan market, where defaults are starting to rise now. They're at a very low level, below 2% last year, but definitely moving higher. And there are some asset-light industries like software, for example, where when we see those defaults come through, the recovery rates for loan holders are a lot lower than they were in previous cycles in the bank loan market. So I think that's sort of the leading indicator, but what's in the private markets is definitely more opaque.
Hey, Gene, thanks for that, mate. As always, Gene Tenuta there of Columbia Threadneedle on a fixed income market. Lisa, how many times have we heard people say credit spreads, high yield should be wider? They should be wider. And you can get behind the reasons why they should be wider, which is why so many people are saying it, but ultimately they haven't blown out in the way people thought they might.
And Gene Tenuta really explaining that this is a changed market than 20 years ago because of the private credit market and how much that's backstopped it, because of a lot of very established companies that perhaps were downgraded into junk status, but still have a pretty big footprint. This sort of speaks, though, to the the opaqueness of this market, this lack of reliable indicators that people used to look at, because for all the people who say recession, high yield bonds are not screaming recession in the same kind of way.
All my radars up on it. It's opaque, opaque, opaque. And I think to Howard Marks' comments over the weekend, I think it's a huge deal. It reminds me of in 1987, I think it was program insurance. I really can't remember. We had no clue what these algorithms were. They were running to hedge against the equity market. Nobody had a clue.
Well, Mr. Marks is one man worth listening to.
Oh, yeah.
When it comes to these things.
When Mr. Marks speaks, you lean forward.
That's for sure.
I just think it's in Bramo's wheelhouse, and Gene was brilliant on it there. But it's something we don't talk enough about.
He also is saying that there are plenty of opportunities. So this is sort of, both sides of the thing. You're hearing about weakness in private credit, and then you hear the likes of a whole host of private debt markets coming out and saying it's a golden era. So, compare these two ideas.
Good morning, Howard. Would you just buy the Boston Red Sox? Do a minority interest with Fenway Sports Group. And, John, last place.
And not good, eh?
Again.
Yeah, almost as bad as AC Milan at the moment. Yeah. They've always got to say there's something to do, right? The day that you get Goldman strategists coming on and saying, look, I've got a trade that's going to give you 5% this year, open a Marcus account, and they just walk you through how to open a Marcus account. Is that the future of strategy at Goldman? 5% returns?
I'll make a bet with you that that's not going to be the case.
They get paid to say there's things to do, right?
But in all honesty, Howard Marks always is invested, and he has been.
Yeah, I'm not talking about Howard.
But like in general, 100% couldn't agree more.
Talking about everybody else. The South side. You're there to make trade suggestions, aren't you?
Yes, 100%.
It's the whole point. Oscar Munoz, former United Airlines CEO, is going to join us in about 3 minutes. Looking forward to it.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The political fate of Turkey's president hangs in the balance as he looks headed for a runoff election in 2 weeks. Preliminary results show Recep Tayyip Erdogan with a lead of more than 2 million votes, which is not enough to avoid a second round. Now, that would pit him against opposition leader Kemal Kılıçdaroğlu. Erdogan has been in power for 2 decades. Ukraine's President Volodymyr Zelensky meets with UK Prime Minister Rishi Sunak today. The British government says it will be providing Ukraine with hundreds of air defense missiles and hundreds of new long-range attack drones. Over the weekend, Zelensky met separately with leaders of Germany and France. Ford reportedly plans to lay off more than 1,300 workers in China due to plunging sales. That's according to Chinese news media. Ford's market share in China had fallen by more than half since 2016. Consumers are increasingly buying electric vehicles from companies such as Tesla and BYD. Ford says its costs are not competitive. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Sydney. From Washington.
In Tokyo. 9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
You have huge demand. We're about equal to where we were in 2019, but we have between 10 and 20% fewer seats available. With demand being so strong and exceeding supply, airlines are pushing up fares and will continue to do so until there's significant pushback.
We're all living it. It's getting more expensive, and there's been very little pushback to it. Helene Becker there of Cowen, speaking in the last week or so from New York City this morning. Good morning to you all. Your equity market positive by 0.3% on the S&P 500. A lift to the equity market. A lift to bond yields as well by a couple of basis points. Your 10-year 348.50. Tons of Fed speak through the week, TK. The big one is Chairman Powell later on this week on Friday. Some data in between. Retail sales coming up tomorrow morning.
We'll have to see on the retail sales. I think that really speaks to the buoyancy. I thought Lindsay Piegza was something there about the buoyancy of the consumer. I mean, it's just irrefutable what she sees in the statistics of a non-recessionary America.
Mike Gapin saying the same thing over at Bank of America. Credit card spending, the data they look at, still pretty robust. No big signs of a slowdown there.
Yeah, one measurement we use is United Airlines is running at 130% of capacity at Newark. If you want to fly to Boston, they put you on a bus and you drive out past Hackensack.
Oh, you're living it, are you?
You go out. It's so Kirby. It's so successful with United at Newark that they don't have enough gates, so it's like Zurich. They got planes way out, like you can wave to Pennsylvania.
You know, I get very upset when I land in Europe and you've got to get the bus. You know the bus.
Yeah,
thing?
the bus.
The bus thing. The bus thing drives me nuts.
Yeah, you know whose fault it is? Oscar Muniz. It's his fault.
He did the bus thing.
He did the bus.
He invented the bus thing.
It's his fault. With us on set, the former United Airlines CEO set the table for Mr. Kirby, author of Turnaround Time. time United an airline and its employees in the friendly and sometimes not so friendly skies. Good morning, sir. Thank you so much for joining.
Oh, with that kind of lead-in, boy.
Nobody is, we talked, Jamie Dimon was on the other day with Bloomberg, and he had a cancer scare. You lived it. You lived in real time a medical issue at United Airlines, and many people say you handled it better than anybody. For CEOs out there, what was a lesson you learned after a horrific cardiac event while you were on the tour of duty? What'd you learn there?
For me, I learned, since I'd only been on the job for 37 days before that occurred, but I had a chance to connect with all my employees, or many of them, and the outpouring of affection and support was amazing. And it just confirmed that the organization, the group, the employees in that United family were ready for a set of directions and guidance that would lead us back to where we are today.
The airlines today have recovered. I believe they got a massive bailout in the middle of the pandemic. Have they paid back to the government, to the people, that massive bailout?
So if I could take just a little contention with the term bailout.
It's Monday. It's a slow news day. I'm trying to get it going here.
No, it was not a bailout. The airline industry was in its best state ever, I think, in its history. And we got hit, our revenue dropped 93%. So it was a significant issue. To keep the airline working and going so the economy could return is what we did get loans, and the loans are being repaid over a 5 or 6 year period. And in that interim period, you're not allowed to do repurchases, you're not allowed to increase comp of your senior executives, so you're still working through it.
Did plenty of repurchases going into the mess, though. Of course, much of that mess unforeseen. There has been some public pushback about whether you should have received any government loans whatsoever based on that. Do you think we are in a position now where shareholders of United get to own the upside, and perhaps you can't talk directly about the company, but shareholders of the industry group get to own the upside, and perhaps the government doesn't in quite the same way?
Well, we negotiated fairly, and I think everyone is going to come out okay at the end of this. I don't think there's anybody that's going to be unfairly advantaged, at least from our perspective. The airline has taken a lot of its tolls. We appreciate the funds from the U.S. government came at a very perfect time, but it was not free. Steve Mnuchin was a sec of finance, was there, and we had some really good conversations and details about what it would look like 4 or 5 years later and whether or not it would indeed be fair. So I would say no.
Meanwhile, when you talk about what it looks like, the airline industry looks a little different now than it did before the pandemic. And we were just talking about how the front of the cab is all first class and business class, and then comfort plus, and then there are like 3 seats in the back that you can pray to get for some kind of high price that you can jam your family into if you're in economy. Is this the future of flying?
It is not, because it's not probably the best representation of what we have today. Yeah, there are multiple classes for different budgets, and you try to do as much as you can. I think at United, we've tried to put a lot of amenities in the back, so you're not sitting in the back huddled. There's plenty of entertainment and such. And again, different budgets require different seating arrangements. And as we've talked, real estate inside an aircraft is very expensive. I think in the book I try to demystify some of those things, sort of to build a bridge between the chasm of understanding by the general flying public and how we run a business. We really aren't in the business of trying to make you uncomfortable, late, and all those things. Really, there's a ton of effort going to not make it so.
And understood, and definitely you can sense that. There is this feeling, though, that there is no better example of wealth inequality than flying, because you go and it's like if you pay enough, you can go first, and then you get these extra things, and it's basically you've got to walk past them to get to the back of the cab to sit in your little seat. I'm just wondering if that's going to be sort of even on steroids, because those are so much more profitable now. And actually, relatively speaking, the most profitable possibly ever, those seats in the front of the cab rather than the back.
Well, I don't think we're as most profitable ever. I think right before the pandemic was the most profitable time in airline history, and it was a nice array of the first class product, economy plus, and of course the basic economy at the end. And through increased flying, taking people from everywhere they wanted to go to where they needed to go, that combination with volume demand and a good level of supply and customer service was really what was creating the revenue generation and the profits. But again, profits aren't the best invest in this industry. And fuel's always volatile, so the equities are always going to be affected by that regard.
You parachute into Pepperdine to do a victory lap, and I want you to address right now something really emotional to a lot of our listeners, particularly this is the coughing side of the table. You're allowed to cough over here. They don't cough over there. We cough over here. I want you to talk about chairman and chief executive officer. Like you're on the board at Salesforce with Mr. Benioff. Benioff handles a number of duties as well. What's the experience you have of the efficacy of a chairman and CEO being one person?
You know, I think it depends on the company and the industry. I've seen it work both ways just fine, and I don't know that there is a degree of we tend to, depending on our feeling for it, we tend to lean one way or the other. Again, having been both at one time and having been separate, from my perspective going forward, I think the separation makes sense because governance and the things that we face as public companies are pretty significant, and it's good to have sort of a division of authority.
Can we talk about lessons, and can we go back to spring of 2017? And you obviously know where I'm going. Mm-hmm. That day, that passenger was dragged off the plane, how you responded to it at the time. Oscar, when you look back, what were the lessons learned for you personally and for anyone that might find themselves in a similar position in years to come?
Yeah, I think, and I talk about it all the time because it was a dark point in our tenure there. I think probably the biggest lesson, it's never too late to do the right thing. I think our initial response, my initial response, for a lot of different reasons, mostly that it wasn't United Airlines actually involved in any of that you saw, but it was indeed our response, my response that created the issue, and it blew up. And I think we're probably one of the first global brands to have a viral social media issue, and we've tried to find someone else, but I think we may be the ones. And then, going on TV a couple days later and, taking it on personally.
When do you realize what the right thing is? I mean, with hindsight, you and I could sit here now and I could say, this was the right thing, Oscar, why didn't you do it? When did you know we've got this wrong and we need to right course pretty quickly?
The middle of the night before I went on national TV. Again, in the book, I highlight sort of my upbringing, my heritage, and all the things that influence us, or the formative years. We're all parts of people we've met, as Tennyson says. And I think in the middle of the night, I sort of looked upstairs for some guidance, and I felt a calm because I knew I wasn't going to try to blame the Express or somebody else, the Express carrier or other folks.
Tell me about international. United Airlines now is we have 3 airports in New York, folks. You own Newark, I get that. You're boxed out of JFK. Kirby's age dealing with this as well. Is this the future of America, of United States Airlines, and that everybody's going to be fighting for a shortage of gates?
Well, there are methods and procedures and policies that can be implemented if we're all willing to do that. That would not rectify, but certainly mollify some of those issues. AWR is not someplace we own at United. It's one of the most difficult places to operate, and you've seen big airlines come in and out of there because of that. There's concept of slot control, there's flights oversight, and then there's air traffic control and its modernization.
He needs more flights to Italy. Can you talk to Kirby and make that happen?
They fly direct to Naples.
Yeah, they fly. Yeah, I know.
And Porto, and we can go on. We have international flights everywhere.
It's very expensive to go to Naples.
The F1 race, Cacio Pepe, that's where it is this weekend?
You're thinking of the Emilia-Romagna.
Oh, sorry.
This weekend, Tom.
But it's a good pasta.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and
It's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I think the rate hikes from last November haven't even really hit the economy.
What's going to have to happen for them to actually cut rates is going to be to start to see cracks in the labor market.
For me, the labor market's really key, and the rebalancing that we're seeing there, I think is very encouraging.
We know the risk of recession is high, but we're not seeing the whites of the eyes of it in hard data.
We're not going back to a world that we struggle to get 2% inflation. If we get to 3%, we're lucky.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. It's an odd Monday out there. All sorts of news flow, disparate things here, there, everywhere. But, John, we've got to go to Michael McKee's favorite week of all time. There are 437 Fed speakers this week. Bostic alone speaks 25 times.
Give me a break. Let me go through the list for you. Bostic, Kashkari, Bostic, Cook, Mester, Barr, Williams, Gorsby, Logan, Bostic, Jefferson, Barr, Logan, Williams, Bowman, Powell, Bullard.
Keep going.
And Bostic. That's just through to
And that
next
doesn't
Monday.
include Brainerd over at the White House.
I mean, come on.
Brainerd's still on the list.
Do you think by the end of the week we might have a decent picture on where policy's going?
No, I would say that would be the answer. And the thing is, they're in the collar in the band that we've been talking about all morning. The lack of volatility in the equity market finally there. And John, I see it with a mid-range 2-year yield, I guess, just moments ago, 4.02%. It's the in-betweeny week of May.
Jokes aside, Chairman Powell, who will we get? Will we get a Governor Bauman leaning into the idea, maybe? They've got to go a little bit further. Or will we get a Governor Jefferson, which is basically all long and variable lags, and all that pain is still ahead of us? Maybe we're done here.
It's going to be interesting to see. Now, they're going to meet. This is important. Powell and Bernanke in honor of Thomas Laubach dying tragically of pancreatic cancer at 55. And, folks, this is our start. John Williams gets all the headline, but providing leadership with the head of the New York Fed was Thomas Laubach. And it's real simple. You go to where we are with Laubach and Williams and then go on to Olivier Blanchard and others' theories now of a reduced R-starred, and that's a titanic bet. Are we going to get back back down to a lower rate, a lower yield regime.
All these fuzzy concepts, though, Tom. Where is neutral? Where is sufficiently restrictive? Jim Bullard of the St. Louis Fed put it this way: monetary policy is now at the low end of what is arguably sufficiently restrictive,
right,
given current macroeconomic conditions.
Lisa, can we believe in like a 6% 3-month T-bill? I mean, no one's looking for the yield structure, short-term paper, to move higher. No one's looking for that.
The person who actually we should have asked about that, or we will next time she's on, is Lindsay Piegza, because she actually does forecast some sort of 6% Fed funds rate.
I didn't know that.
The issue that we're looking at right now, with respect to all of these speakers and Fed policy and do tightening and long and lags and R-starred, is they take a dartboard, throw something at it, and you'd be just as right with respect to how quickly this economy has gained steam and kept it. The stubbornness of this inflation versus the transitory that's become a dirty word.
To both you and John, let me start with you in that we've got it wrong. And with the Bank of England last week, everybody in Citigroup of Vasilis Giannakis leading the way, we got it wrong. There's these other factors going on besides conventional bow tie economics. It's not working. There's other issues like technology, demographics, a pandemic, dare I say a war in Ukraine, and you see it in the United Kingdom misguess.
There are plenty of things we got wrong. I think one of the bigger issues that we got wrong in the last 12 months is just how much this economy could tolerate higher interest rates.
Yes.
Not just the United States, but Europe for that matter too. It was unthinkable for so many people who have followed Europe and the ECB specifically for a long, long time that this ECB could get up to 2, to 3, to 4, and the economy wouldn't just collapse. Now, maybe that is still in our future. In the words of Governor Jefferson, maybe that pain is still ahead of us, but right now it's been surprising for a lot of people.
Lisa, Felix Salmon writing in Axios over the weekend saying, what did he get wrong? And he said he had to wait for COVID to get economy to go. And guess what? The economy went before COVID ended.
And we are still here, and it's not coming down. And this is sort of, you talked about, well, it's out there somewhere. Well, it doesn't matter when, right? I mean, essentially, and if it doesn't come, at what point do some of the inflation expectations become more entrenched?
It's rounded up Monday. My data check, John, to you is simple. 4,200 SPX, 33,000, Dow 13,000, NASDAQ 100. It's a horrific equity market.
The range holds all through the year, 3,800 out to 4,200, and right now at the upper end of it on the S&P 500 futures positive 0.4%. Yields a little bit higher by 3 basis points, 349.44. Some soothing words over the weekend from a range of officials. We are at the crunch point. Talks are ongoing at the staff level around the debt ceiling. And Tom, at the higher level, talks will resume tomorrow between the president and Speaker McCarthy.
Maybe they'll do that on monetary policy as well. Joining us now, Anders Persson, CIO, Global Fixed Income at Nuveen, to make sense of this. Make sense of this, Anders. Distill down the Nuveen view, the constructive view into the end of this year.
Yeah, good morning. Yeah, I mean, I think, first of all, there are a lot of crosswinds going on here, as you guys are alluding to. So there's plenty for the market to kind of digest here, and that's arguably what's making it interesting at this point. I think in our seat here, we do feel like now with the Fed hiking cycle either over or nearly over, the main driver for fixed income markets is shifting a bit away from kind of, anticipating what the next move will be for the Fed towards more working around what is the concerns around recessions, what is the kind of path of inflation. So really, I think the market is now going to focus a lot more on that as opposed to, okay, what is the next kind of move for the Fed? So that's really where we're trying to focus more in on. And ultimately, yes, we are constructive as we're looking at fixed income medium to long term, but we're also a little bit more cautious here on the short term. We do think there could be some spread widening. We think the market's a little bit generous in terms of Fed cuts coming. We also are keeping a close eye on the debt ceiling uncertainties.
Well, Anders, let's look right across the curve. Let's go out from T-bills if you want, 2-year, take your pick at the front end, all the way out to the 30-year. What is the pocket, the maturity that you like right now across the Treasury curve as you anticipate maybe growth slowing and a Fed that's done?
Yeah, no, I think we're overall, I would say we've become a little bit more neutral on duration. We think that we're actually settled down here a little bit of a more of a trading range. I do think the 10-year is probably the most comfort that we have, probably more so that we are going to be in this sort of 3.25 to 3 3/4 kind of type range for a bit. We do think that the 10-year could end up at around 3.25 by year end. So really a little bit more of a stable backdrop from that perspective. The front end, given so many uncertainties, given the different paths that we're dealing with, we're a little bit more uncomfortable there, and certainly think that the 30-year is a little bit too far out there to really make a bet on. So I would say sort of in the middle part, but all in all, I think we're finding more comfort going out into the credit space and kind of taking more on the risk on that side versus on the duration side at this point.
Anders, how fragile is this market to the idea that inflation truly is sticky, that we're not going back to a 2% reality in the next few years? And I say this as this divergence opens up between forward break-even rates and consumer expectations, as we saw in the University of Michigan survey that came out on Friday. Do you really raise this as a potential tail risk at a time when so many people are gleaning comfort in duration?
Yeah, no, I would say inflation and recession risk are the two ones that we're the most focused on at this point. We do think that inflation has likely peaked, but we do think it's going to remain too high, I'll call it, relative to the Fed targets here. At least throughout this year, we're actually looking at inflation at 3.5% by year end. But to your point, Lisa, there is a little bit of a mismatch here between what we're seeing on maybe on the consumer side. You know, Michigan survey coming in at 3.2%, you know, higher than expectations more broadly. I will note that number tends to get revised down at times, so perhaps a little bit higher than it truly is. And compare that to the break-evens that have been stable to lower, you know, 10-year break-even around 2.2% at this point. So we're kind of seeing a little bit of a divergence between what the market is expecting and what maybe we're seeing on the consumer side. And that's the mismatch that really want to see that kind of get a little bit more of a stable environment going forward. So all in all, we're in the camp that inflation is going to stay a little bit stickier than expectations. That's why we are not expecting the Fed to move anytime soon. We think the Fed's going to remain very focused on that part. And while we're seeing, you know, basically cuts being priced in the markets by year end, we're expecting that to be too optimistic at this point.
Anders, thanks for the viewpoint, sir. Anders Persson there of Nuveen. Brouwer, Anders is one of those people you call when things are going nuts, and you just want someone to remain calm about what's happening in fixed income at the moment.
Are you suggesting that I'm not the person you call?
Don't call me.
Oh my God, the world's falling apart.
Don't call me either.
No, I mean, honestly, when things fall apart, he'll be like, well, if you take a look, it's a potential risk, but it's not that big of a deal. I mean, or it is, but we can manage through it. This has been sort of the feeling that we've gotten with the confidence in duration from so many fund managers. And to me, this is fascinating. The tail risks be what they may, but people still, developed market bonds still seem to be the bright spot.
Even with this debt ceiling nonsense.
Exactly.
Even with this big debate down in Washington, D.C. I think it was Luke Hickmore of Aberdeen last week. I said, okay, big question. I think it's the only question that matters for any fixed income strategist right now, anyone in the bond market. If things hit the fan in Washington, you were a buyer or a seller of treasuries. And he said, not the 10-year, the 5-year. Once the 5-year, the belly of the curve. That's what he's after. If things hit the fan,
totally agree.
That's the pocket of the curve that he wants to buy.
I totally agree on the duration out. It's non-linear. All the focus in the media is obviously the benchmark 10-year used to be the 30-year, and all inside Fed speak like, and in the belly is a tradition 5 to 7 year duration is really where you want to go. Can I mention what we haven't talked about today, which we have to do another week of bank repair confidence, and I'm not sure how that goes this week, other than to say, oops, it seems like we have a pretty good economy. I guess that helps. But, you know, sometimes it's not the news, folks, it's what's not said. Over the weekend, nothing was said about the banks. That's April's problem. It's gone.
It's a business model problem from now on. Funding costs are higher. Assets are still in a tough position. Lisa, the regulatory environment for some of these names is going to get even more difficult. The outlook for profits has got really tricky as well. Give me the reason to buy.
There was no discussion about the change in bank deposits that we got on Friday, which I thought was interesting. Another $13 billion decline, almost $14 billion decline in bank deposits. Just this grind, a slow grind that, again, challenges the business model.
And not just the return of capital, but return on. It's just another weekend of people sitting around the table with their families, whoever, getting advice and saying, yeah, we should maybe buy some T-bills. Buy a money market fund on Monday.
Apple Card that gets your
Get an Apple Card, you know. Didn't you have this conversation at home?
I may have had this conversation.
Right?
Yes.
It's
titanium.
Did you see the way she went?
There you go.
John, did you see the way Ms. Abramowitz went after Mr. Munoz over economy seating on airplanes?
Unhappy about it.
Have you ever flown children on a plane? I'm just saying, theoretically. the expense is high. Let's move on.
We can move on. I can get you out of this.
Thank you.
Laura Rain comes up at 8:30.
Laura only flies business class.
She'll be with us in about 18 minutes from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden and House Speaker Kevin McCarthy meet again this week to try to break the impasse over raising the debt ceiling. Other congressional leaders will also take part in Tuesday's meeting. If the borrowing limit isn't raised, the U.S. could default on its debt. McCarthy has said any change to the limit is contingent on a budget deal. In Turkey, there could be a runoff in an election that's testing President Recep Tayyip Erdogan's 2 decades of power. Preliminary results show Erdogan with a lead of more than 2 million votes, but that's not enough to avoid a second round of voting. A runoff would pit Erdogan against Kemal Kılıçdaroğlu, which has the backing of the nation's broadest ever grouping of opposition parties. In Thailand, a big victory for pro-democracy parties in Sunday's parliamentary elections. Now that sets up the biggest challenge to the royalist-backed establishment since the military seized power in a coup nearly a decade ago. The Move Forward Party wants to change a law that restricts criticism of Thailand's powerful monarchy. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Going to keep rate World Cup. This is a 3.
As the economic picture down.
The OK is getting ready to make.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Bloomberg has the Fed coverage you're looking for. Today, Bloomberg's Mike McKee sits down with Atlanta Fed President Raphael Bostic.
There are just a lot of things to reflect on in terms of where the economy is.
Then on Tuesday, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook.
And an interview with Chicago Fed President Austin Goolsbee.
We should gather further data.
It all starts today, right here on Bloomberg, your global business authority.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation. And so this delicate balance has allowed, I think, the consumer to continue to stay afloat, which pushes out our recession call to the end of the year.
I'm sure that whatever Lindsay Higgs had just said there was really interesting, but Bramo's story in the commercial break was just
We got to go sports.
riveting.
We got to go sports. We got to go big, little during the ads, and then you be
Just a
quiet.
Bramo count.
We have to introduce you.
Let's just move on.
We have to introduce you before you can talk, okay? But you know, I look, John, at what we're doing here, and it's like a Damien
never going to come back.
Let's bring in Damien Sassauer right now.
Okay,
Our
you
sports
can
expert.
talk now. Wonderful.
Nice to see you both.
Good to see you,
Good
man.
to see you too. Yeah, thank you. Good. That was good.
Damien, the whole ad thing of sports where they show the action in the commercial break, you think it would work for surveillance?
I think it would work for emerging markets is what I think it would work for, Tom, because, I'm kidding. Look, I think for surveillance, I mean, you have like, maybe I could be in a sound booth and I can play music kind of like a Howard Stern show, so every time you guys say something that, your audience is used to hearing, I can have that little sound in the background. I'd like to do that for you guys.
Let's reset. John, go to the data and let's explain why Damien's here.
Turkey front and center. The prospect of a runoff, something that Erdogan hasn't had to deal with in recent times. How important is this, Damien? What's emerging over there in Turkey right now?
Do we really think that Erdogan's not going to be around in 2 weeks from now? I mean, did the markets really, really believe that? I mean, look, Kılıçdaroğlu, to his credit, and the CHP, which is the centrist, that's going to the runoff against Erdogan. I mean, great job. But I mean, let's be clear. Erdogan has 9 lives, and that country is wholly financed by Middle East and Russian money now. And so there's a lot of offshore interests in that economy that go so far beyond foreign creditors in the U.S. and the West. So for me, this is nothing new. This is basically a man who has 9 lives. He's the longest strongman in the European Union. I don't think he's going anywhere anytime soon. It's going to be very, very difficult for them to displace him.
I love how you say, they got to run off. Good job, but it's not going to get anywhere. Here's my question. We all think of this as a potential positive shift for Turkey, if there should be some sort of surprise, or the status quo if Erdogan remains in office. Is it status quo, or is it something different if he remains after all of the years in power and then yet another election?
I mean, that's a great question. I think really, the populace is really voting with defense. They're voting with national security. Look, the economy and inflation, all that out the door. I mean, this is about Kurds, the migrant crisis. This is about the MHP, the alliance between Kılıçdaroğlu and the MHP, which is 1/5 of the population of Turkey. Of their 85 million people are Kurdish, right? So these are all fundamental issues to Turkey, and I think that's really what's supporting the bid for the AKP.
You mentioned the monetary policy here, and John was talking about this earlier, how there was a sort of unconventional approach that Erdogan has taken, which is in response to inflation, you cut interest rates because that will bring inflation down. Will that shift after this election?
It would, obviously, if the CHP wins. But again, Erdogan has 9 lives. He doesn't seem like he's going to shift in terms of monetary policy and in terms of the way the economy is being managed. And he has complete control right now and autonomy to do pretty much whatever he wants. And so we expect over the next 2 weeks into the runoff to be a lot more interventions. I think there's been $150 billion of interventions by the Central Bank of Turkey over the last 16 months alone to support the currency. Think about all that savings that's been washed away. It's just such a tragedy.
And all these idiosyncratic opportunities, Argentina's moved, Turkey's moved. The one that really hasn't moved to me is Thai baht. There's an election over there. We don't need to go into the details. The answer is it's a huge deal, not only for Thailand, but for Southeast Asia. Stability. Is there a big figure move here in strong baht that hasn't happened yet?
There absolutely is. And it's not really due to, again, the idiosyncrasies of what's going on in Thailand. Right. It's due to the potential for a carry trade unwind. Let's just take a step back and see where we are. Look at Russell S&P ratios. Look at gold to oil ratios. Look at 5-year, 30-year in the U.S., all signaling very late cycle, end of cycle. So if we are there, then the carry trade unwind is moments away after that, right? And the Thai baht has been a funding currency along with the Korean won and the Malaysian ringgit, all those low-yielding Asian currencies. So if we see a reverse of what we've seen year to date, which is all these high carry currencies outperforming, it's the Thai baht and those funding currencies that are going to rip in everyone's face.
To review this for non-sophisticates like me, we go back to strong baht, back to pre-pandemic.
Yeah, well, pre-pandemic was, I don't know, it was at 38 probably, 6 months ago. Now we're at 32 Thai baht. Which is kind of fair value over the last 5 years. But you're right, it could go, as low as 30 back, into a 29.
You realize I completely made that up. I'm
sure he's just being polite. I'm sure he's absolutely convinced.
No, but I think, look, the funding currencies are a good trade if you're thinking it's sort of an end of the world scenario here, where the U.S. goes back into recession and all this stuff we've seen in the S&P is a farce.
Can we throw in Argentina?
Argentina, yeah, we're going to see another 600 basis point rate hike. Is that what they're called? After 1,000 and later
close to 100%, Damien. Interest rates. What's going on there?
The blue chip swap rate, which is their currency, their de facto currency, the non-official rate is down 35% to the dollar year to date. So the currency is meaningless. I think we have this election coming up. You know, Tom and I were just talking about Patricia Bullrich, who is leading in the polls there. She is proposing a sort of bi-monetary kind of policy where it's along the lines of an Uruguay or a Peru, where it's sort of a dollarized economy, not really. And they've got $44 billion tied up with the IMF that they need to rework. And the IMF is not talking to the Fernandez administration, so there's a lot of hair there.
Argentina might be an idiosyncratic story, as we were talking about earlier. I want to talk about Turkey and then what we saw in Thailand. And more broadly, are we seeing a shift to more democratic types of governments in some of these developing markets that are only giving a tailwind to some of the emerging market trade that some people have been piling into so far this year?
Well, I think they're making a last-ditch effort, right? We have seen that populist shift, certainly in Latin America over the better part of the last few years, to see something more, pivot more toward a capital or sort of a democratic-based, political regime like we're seeing in Thailand, I think is novel. I think it's amazing. Certainly in Turkey, we're seeing a little bit of that. But I just think there's so much structurally in Turkey to prevent democracy from really getting its footing there. I think that's the real issue there, unfortunately.
Damien, thank you, sir. As always, Damien Sasso there of Bloomberg Intelligence, starting with Turkey, ending with Turkey. Piotr Mattis, out of London, who was with Rabobank, he's now with InTouch Capital Markets. Used to follow him plenty when I was back in London a number of years ago. He said this: those expecting the central bank to make a U-turn, Lisa, and raise interest rates markedly after the elections could end up being disappointed, I think, to put it mildly.
There's the election and who's going to actually win in the end. But then there's also how quickly can you really make an about face, given that it is incredibly politically sensitive. I mean, if suddenly people have to pay that much more to borrow money, it becomes rather complicated from a populist kind of standpoint.
That issue in Argentina, Tom, is just brutal. That is brutal stuff.
I would say the summation of all my conversations around the World Bank IMF meetings was idiosyncratic doesn't really capture what Damien said, which is the size of help that's already been given is truly unimaginable. They basically bet the house on helping Argentina and got slapped in the face.
In the next hour, we'll move on from EM and slaps in the face. Colin Martin of Charles Schwab, Sam Linton-Brown of BNP Paribas, Gagi Chowdhury of BlackRock, three very smart individuals on this bond market and beyond.
You can't do that. You're like, we're going to move on from absolutely everything that you just saw over here, and we're going to actually talk on.
We're going to talk about, things like equities and bonds and
other things that actually trade and make.
Yeah, things that matter at 9:30 Eastern Time.
But okay, carry on.
Can we? You know what I learned today, which is great.
What did you learn today?
With Damien, I'm taking
Please,
notes.
someone learned something here.
I'm glad I learned something. I had no idea of the midfield of Juventus years ago, which was sort of like the ginormous. It was like Babe Ruth and Lou Gehrig. It was Conte was the coach,
right?
And there was a guy you introduced me to today, Pirlo. There was Vidal.
Yeah, Pogba.
And somebody else I can't remember.
Pogba, Marquisio.
Yeah. Was that like the best midfield ever?
It was one of the best sides out there. I think it was that team that came undone against Barcelona. The Neymar, Suarez, Messi, Barcelona, if I remember correctly. I think it was that side.
But, it's completely foreigners, but it's like Gehrig and Ruth or, other things we've done. It's extraordinary what they did.
I'm pleased you found out who Andrea Pirlo is.
I did. It's the highlight of my day. Am I doing okay, Damien?
You're doing all right. Very well.
Can I come back?
Next time he's in New York, TK, we'll get him on the program. All right, we'll work that out.
Yeah, road trip.
Big fan of Bloomberg surveillance on reliable inform. What?
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
On radio, on television, Bloomberg Surveillance. We're thrilled you're with us on a Monday. Retail sales tomorrow. We haven't talked enough about that. Get to that in a moment. And the data front, it's simple. Little lift to equities. Don't know what to do with it with the VIX, 17.47. A little bit of lift to yields over the last 120 minutes, 4.01%. 2-year, 3 basis points on the 10-year yield, out to 3.50%. A little higher yield regime there. I do want to point out, I had a sudden print of 69 handle on West Texas Intermediate, $70.63 right now. And Lisa, retail sales tomorrow, we just haven't talked enough about it. I mean, it is what it is. It's the state of the consumer.
Yeah, especially before Home Depot and then Target and then Walmart coming in on Thursday. I do want to bring you this news. So the Empire Manufacturing Survey, which really gives the first read on manufacturing of any of the surveys for New York, came in a negative 31.8 versus the expectations from negative 3.9. So it was expected to deteriorate, but not nearly as much as it did. Again, how much does this really fly in the face of the optimism that we saw in the prior read for this? Basically, the sense that perhaps it was short-lived. This is the biggest decline going back to October. So really a sense that perhaps things are not all sanguine.
Bramowitz keeping us going here, folks, because I said the 2-year yield was 4.01, 4.02%. That was long ago and far away. That was at least 45 seconds ago.
Yeah.
3.9789 on the 2-year yield. We have moved 3 big figures, even 4 big figures on the 2-year yield just off that Buffalo, New York shock.
Yeah, this idea of the long and variable lags perhaps are taking hold. We will have better sense as some of the data continues to ripple through. In the meantime, it really has been the debt ceiling front and center with Biden and McCarthy planning to meet on Tuesday. The two of them, the romantic Oval Office meeting that you talk about, Tom. Laura Rame of FS Investments weighing in not on the romance of it, but rather on her expectation, quote, that we will eventually raise the debt ceiling. My concern is that it will occur only after we have accidentally tripped into technical default due to a miscalculation on one or both sides, Tom. A big concern given the fact that so many people just believe it's a done deal, that they will get something through and it won't be a market-moving event after all.
Market moving is the key phrase here, and I'm doing it right now. Folks, you can do this on the Bloomberg Professional service. I'm going to go back. Laura Ram knows I can do this. I mean, she's got us down cold. And Laura, we're now down just through 2 standard deviations of weakness on the Empire Manufacturing statistic. It's a tertiary number. The fact is it moved the market this morning. The fact is it's wrapped around this fiscal ballet in Washington. How unpredictable is it out there?
Right now, because there's a vacuum of other big news, I think that we're seeing these smaller data points really have outsized impact, and that's a big move. What we are seeing is the current data looking still pretty solid, but the forward-looking stuff is starting to get more concerning. My expectation, and you guys know this for a long time now, I've been saying
recession probably at the end of this coming year. And given that that's my expectation, I would start to see some of these forward-looking things start to deteriorate about now.
What tools are you using at FS Investments to determine which way we move in the collared band we're in right now?
So the tools that we're using really are for managing either side of that band. Look, volatility in the Treasury market is acute. It's not visible at the actual moment, but the fact that we got the MOVE index at its highest level this year, not during the pandemic, not during COVID, it really peaked now, I think is something we need to pay attention to. And I think the problem right now for me, for every investor, is it could break in either direction. The problem with the debt ceiling negotiations is that even though it puts treasuries at risk, the market reaction is to buy treasuries. It's the safe haven. So I think there's as much chance that we could actually move lower in yields on the back of some disappointment in the debt ceiling or some disappointment in resolution versus the upside. And yet you've still got, inflation. I'm in the camp that it's not going to go neatly back to 2%. I think there's another upside surprise waiting out there in the inflation data. I think that could easily push you higher too. So the tools are designed around managing for the fact that it is highly uncertain which side it's going to break to right now.
There's a lot there to unpack, Laura, and I do want to get to this idea that you could see inflation break out to the upside in just a second, but just hanging on to the debt ceiling debate, given a sense that you'd expect there could be a technical default, eventually, yes, a resolution, but the technical default could create a real issue. Is that sort of what could send yields lower? Is that basically what the implication would be from that, or is there a longer-term consequence to such a technical default?
Oh, there's absolutely a longer-term consequence, and it's been building. I think we've seen globally the dollar erode somewhat as a reserve currency. That continues to be a drumbeat that is told not in quarters or weeks, but in years. And unfortunately, things like the debt ceiling are a self-inflicted wound on dollar sovereignty around the globe. So when you think about what that means, the U.S. has managed to have this position where we can just issue debt because we're sort of the global reserve currency and we're the global bond oasis in times of concern. But looking ahead, I think, risk a world where Treasury yields could move higher. The Fed's not going to go back to zero anytime soon. And, you're really looking at the forward dynamics of debt payments looking pretty difficult in the U.S. It's all gearing towards higher long-run debt. Not this year, but I think that's something that we're going to be dealing with going forward. It's certainly going to be a big election issue. So the point is that near term we have some downward pressure on yields, but secularly we have this longer term pressure. And against the backdrop, we have no Treasury market liquidity. That's a real concern that has been sparking acute volatility.
Laura, you talk about there could be a surprise in inflation to the upside, and I want to pair that idea with what we just saw out of New York manufacturing, this index that actually plunged, doing the calculations, Bloomberg did them, the most in 3 years, more than 3 years. How does that dovetail with this idea that we could be surprised by how resilient the pricing pressure really is?
I think we need to be aware of the Empire manufacturing data, but it is one piece of a lot of regional numbers that we look at. So I want to really focus the conversation on the fact that inflation in the U.S. is really consumer driven. I think right now companies are still riding off of a wave of euphoria where they're able to take more pricing power. I think we will be watching the earnings closely because we've seen a lot of consumer-based companies keep that pricing power. That keeps the inflation. That's another piece of this entrenched inflation piece. So I think the manufacturing numbers are important. They are a leading indicator of sentiment, but given the importance of the household in our economy, that's to me the real source of it.
On radio and television, and for joining us, Laura Ram with us with FS Investments. Futures up 8, churning futures with the VIX 17.62. I really want to note the 2-year yield. On radio, it's really captured nicely on TV with a plunge. Intraday on the 2-year yield, 3.98%. Laura, the derivative specialist Douglas Cass emails in. Thanks, Doug, for watching this morning. And he really notes that we're starting to get to data points which become tail effective. You're expert at this with your foreign exchange heritage. We get out from the normal bell curve, a Gaussian curve, and with things like the Empire Manufacturing, we really get some instabilities in the tails which elevate risk. Do you agree with that? Are we where we have elevated tail risk?
We absolutely are. Things like the uncertainty around banking, which has, to me, mysteriously fallen off the radar of markets, but I think we really do need to pay attention to that. The fact that the debt ceiling, the timing is uncertain, which means that any sort of derivative structure, really, normally we think of these things as sort of, very time relative, and the timing is so uncertain that I think it makes it all very hard to really structure something clear around an end date, and it means that we just get these fat tails that persist, and it could be for weeks more.
Link in your dollar call to FS Investments Economic. Can you make a call, or is it just so muddy you don't want to go there?
No, I think near term we are facing some potentially fresh dollar weakness, and that's because we do have, I think, the debt ceiling, frustration is going to weigh on the dollar. I think right now the Fed clearly being done while other central banks have more room to go. And finally, the fact that we're still dealing with some banking headwinds, I think, are all conspiring to be a headwind for the dollar. I think the question is, how far does that go in a world where if there is truly some flight to quality, we could see the dollar, have a limited decline because of that sort of support underneath.
Laura Ram, thank you so much. With FS Investments, their chief economist, great to be with us this morning. Lisa, I want to go back to somewhat the instability that Doug Cass was alluding there. The Empire Manufacturing is a tertiary statistic. It's very good math out of Buffalo, New York, about manufacturing. Lots of Feds, of the 437 speakers today, they all have their favorite
this week
surveys in that. We got to ask ourselves, why are we focusing on a tertiary statistic? And on a standard deviation basis with much volatility, the fact is it is getting stressful. It's not pandemic stressful. It's not 2008 stressful, but I'm sorry, it's nudging there. Where are we going to be in 30 days if we see the continuation of these data points?
The theme of today has been painful and trading range, and that's sort of what people are saying, and what we heard from Laura Ram really highlights that, because yes, it may be a tertiary data point, but we don't have anything else. There's nothing else filling that void, so people are going to trade on it. And oh yeah, by the way, something else is going to give you a completely opposite read in terms of both strength and inflation. So what do you do if the tail risks are both potentially yields going much higher if there's an inflation surprise, or much lower if we get either some sort of deterioration in the economy or some sort of debt ceiling debacle where you do get some sort of technical default?
What you do to frame the optimists is corporations adjust. I see $39 billion of mergers today. People adapt, people adjust. The consumer keeps going for any number of reasons. And I'm going to go to Neil Dutta's optimism on inflation-adjusted incomes. Maybe that provides the oomph against non-Gaussian vibrations.
I just still can't get over that companies are almost bragging about being able to raise prices beyond inflation for consumers. Well, look at how good our pricing power is. That's unusual for a cycle, and that really speaks to the stickiness of inflation.
Off the pandemic, coming up for you nationwide, worldwide, Jana Lieber of the Metropolitan Transit Organization.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky had a surprise meeting with UK Prime Minister Rishi Sunak today. The British government says it will be providing Ukraine with hundreds of air defense missiles and hundreds of new long-range attack drones.
The moment of challenges, the moment for us, for our society, our people, especially for our soldiers, moment is tough, difficult. Thank you very much for this package that you prepared. Great, huge, really what can save the lives for our people. Thank you so much.
Sunak says it's important for the Kremlin to know that, quote, we are here for the long term. Russia insists it is cutting oil production. At the same time, though, its seaborne crude oil flows to international markets continue to rise. Flows are now up by 10% since the first week of April, a new high for the period. Almost all of Russia's oil is going to China and India. The political fate of Turkey's president hangs in the balance as he may be headed for a runoff election in 2 weeks. Preliminary results show Recep Tayyip Erdogan with a lead of more than 2 million votes, which is not enough to avoid a second round. And that would pit him against opposition leader Kemal Kılıçdaroğlu. Erdogan has been in power for 2 decades. And Vice Media has filed for bankruptcy protection and struck a deal to sell itself to creditors. That underscores the huge fall for the media upstart that was once valued at $5.7 billion. Creditors, including Fortress Investment Group, Soros Fund Management, and Monroe Capital, have agreed to buy Vice's assets for $225 million and assume significant liabilities. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
In Big Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Get people in the market, you really need to offer them something. And so I think, that's why we run into this valuation limit around 4,200, because you add 10% to 4,200, all of a sudden you're at 4,600, and a lot of people aren't kind of comfortable with, with that type of upside level. So yeah, we're kind of bouncing into a ceiling at a floor, effectively.
Stuart Kaiser, really on fire today, really, really extraordinary with Citigroup. Brought along T-shirts to have something to do with Juventus and AC Milan and Italian football as well, but that was good swag, it was merch.
It was our full 7 a.m. hour.
We'll ask him back. We'll ask him back.
Yeah, we'll learn all about it.
But what was there was you got to be in the game. I mean, David Kotak was on Friday. He's 36% in cash running, smaller shop. The bigger shops can't be 36% in cash. That's not how the game's played.
Well, there's a real big question here as we trade between this range. What's going to be the post-pandemic rebound of other asset classes? And I think of commercial real estate, especially in some of the bigger cities at a time where we're kind of returning to work, but not fully just yet. And so to me, that's sort of a question, that unknown hanging out there that sort of lurks beneath the surface of these public markets that are really struggling for some sort of range.
We're going to focus now, and for those of you internationally and national, this is coming to a city near you. We're going to focus on New York City and the 5 boroughs. Let me get your attention. There are 789 bridges in New York City. I can't believe I'm saying that, but that's the number. There's 24 movable bridges. Maybe there's 4 tunnels. Jano Lieber's with us right now. Jano, thank you so much for joining us. Chair, Chief Executive Officer of the MTA, in charge of all this headache. I'm just going to go to one incident, and Lisa Abramowitz is going to bring up others as well. I can't get up Madison Avenue anymore. When does the congestion end?
Well, you know, you said it exactly right, Tom. Congestion we got to do something about it. There's no choice. We can't. Ambulances can't get to hospitals. Police can't get to crimes in progress. It's out of control.
Okay.
So what New York is doing is we're leading the nation. We're saying it's time to do something about it. We've got a congestion pricing plan. It's been tried all over the Western world: Stockholm, London, Singapore. And we're going to put it into effect. We don't have a choice. It's time to, start doing aggressive action to deal with congestion and also to save the planet. We all know that's on the agenda.
General, what's so important here, and I really bring this up, folks, living up near Mount Sinai, the privilege of living near Mount Sinai, where the ambulances can't get to the 101st Street emergency room. I want to go to the rapidity of this. London fixed this. Other cities have dealt with it. It's been a failure, say, in Mexico City or Manila. How fast can you free up the congestion in this marvelous city?
It's a good question. We've got the federal approval almost done. We've been at this for a couple years now. The Trump administration wouldn't let us deal with the environmental process the federal law requires. Biden administration let us get started 2 years ago. We've hit the milestones. Now we're going to be implementing. We're literally going to start building out the infrastructure, the cameras, the sensors, to do it all in about a year. And then, Tom, you and I will watch as it starts to take effect on congestion, hopefully to open up the roads.
Lisa, my amateur take on this, and I mean amateurs, he said the cameras word, and that's the word nobody. London is cameras driven. New York is not. That's my guesstimate of how we begin to get there.
Jeno, how much is this really an effort to try to bail out a subway system that has struggled through a pandemic and really still is not seeing its ridership come back?
Well, our operating budget, we have like an $18 billion operating budget, Lisa. We actually dealt with that with the governor's leadership in the current budget year. We've actually dealt with it for a 4-year plan period. So kudos to Governor Hochul and the New York State Legislature. Unlike many other places, we know that mass transit is the lifeblood of our city and our region. And it's for New Yorkers, it's like air and water. We can't survive without it. The governor and the state legislature stepped up. The money from congestion pricing, by contrast, is going to go to our capital budget, which allows us to maintain this 100-year-old plus system. Stuff that's that old wants to fall apart. You got to invest in it like any business would. It's $1 trillion asset, and we need the money to maintain it and to improve it.
How is the infrastructure changing and the allocations of that budget, Jano, given that ridership hasn't come back to its pre-pandemic level just yet? There's a question about whether it will at least in the near future, as a result of the work from home trends and the emptying out in certain parts of the office space. How do you allocate to a system that is the lifeblood and is struggling with a lot of issues right now, whether it's elevated crime, whether it's just the general kind of buildup of filth? I'm sorry, I'm a native New Yorker, so this is something that I have seen over the years. How much are you going to try to remedy that?
Well, listen, first of all, let's get straight on the safety issue. Crime in the subway system is down like 10% since last year, and given the rise in ridership over the same period, it's really down. Overall, we're back where we were roughly before the pandemic began in terms of the risk of being a victim of crime. There are like, 5 to 8 crimes on the subway system every day, and with a population 4 million right now, that's the size of the city of Los Angeles. So we're not ashamed of our safety record at all. It's actually pretty good. But Lisa's question is on the money. How do you get people back to normal life? Interestingly, if you go apples to apples with pre-COVID, we're about close to 80%. Work from home is a factor. It's what's pushed us down in terms of ridership. But there's so many people who use the subway system to go to school, to go to medical appointments, just to live their lives. Same with the bus system. That we're on the move. We are very much rising, and we've had 4 million rider days. again and again in the last couple of weeks. It is headed in a good direction.
Jano, this is a personal mission for me. I sit on Fifth Avenue, and it's a privilege to sit on Fifth Avenue, and I count the number of people on our city buses. Sometimes I see 4 people, sometimes I see 12 people, but many of those buses are empty. How do we fund free bus riding so that the bottom quintile of people in New York City can service the upper quintile? It's an outrage that we don't fix the transportation system of the poorest people in New York City. How do we do it?
You know, Tom, the key is to have transit. We're really proud of that. It is one of the things that allows us to support our great, working and middle class New York community. The buses in Midtown that you're seeing, a lot of that is people can walk faster than the bus can go because of that congestion. I'm convinced, I grew up riding the bus, I'm convinced people are going to come back when we pick up the speed. Congestion pricing, bus lanes, bus camera enforcement are going to do that.
What do you know about Lincoln Tunnel? For those of you internationally and worldwide, the tunnel system in New York City is an outrage some of the hours of the day. I'm getting older watching this, Jenna. When do we get another tunnel to relieve the burden? What can you do about it? What can the mayor do about it?
Honestly, Tom, I don't want to disappoint you, but I'm not here to advocate for expanding the access of automobiles and trucks into our central business district. Every time we build new capacity in that respect, it just fills up. So what we have to do is to build more and better mass transit. It's the way that we can continue to grow our economy and the population of our central business district, both workers and residents, without environmental consequences. And that's where we're headed. We're making those investments.
An update and an experiment for all the cities of the world. Jenna Lieber is with the MTA in New York City. It's amazing there, Lisa.
Thank you.
The themes that were done to every city in the world, some doing it right, some doing it wrong. To me, it's just a differential with London right now. I mean, that's where I would go with it.
Traditionally, you can rank cities according to who has the worst traffic, and I recently did this for a variety of reasons, and it really hinges on just how good or bad their public transit system is. If they don't have an effective public transportation system, you can see people getting stuck in traffic for 2-3 hours to go, 30 miles, and this is really a problem for, basically anyone who wants to live there. So at what point do you have this real issue if suddenly the whole lifeblood was disrupted because of the pandemic? And there's an ambiguity about how much will naturally come back with commuters. It is an existential issue that's facing a lot of big cities in the world.
I'm not informed on this, but basically Manhattan is a parking lot. I mean, there's, not to make a joke about it, but you look at the old photos and there were lanes open. We're basically, with this congestion, we're a parking lot.
There's also a question of if you charge $23 for someone to come into the city, are they going to come? How much revenue are you actually going to raise? Will this actually really impede a certain inner borough kind of connectivity? There are a lot of questions here.
Good. We're going to do that. Coming up, we'll have the transportation experts of Fargo and the Dakotas.
Very bad public transportation there.
Futures debate. Stay with us. Bostic in the 2 o'clock hour. Good morning.
Middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are, launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg.
Let's get your week started. Live from New York City this morning. Good morning, good morning. Just about positive on the S&P 500. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York, coming up, Biden and McCarthy to resume talks this week. As Secretary Yellen prepares to offer an ex-date update, the president says we've not reached the crunch point yet. From New York, we begin with the big issue. Debt ceiling talks resume tomorrow.
What I've learned a long time ago, and you know as well as I do, it's never as good to characterize a negotiation, the middle of a negotiation. I remain optimistic because I'm a congenital optimist. But I really think there's a desire on their part as well as ours to reach agreement. I think we'll be able to do.
President Biden telling reporters that he expects to meet the Speaker of the House just a day before leaving for a G7 summit in Japan. National Economic Council Director Lael Brainerd characterizing staff-level talks as constructive.
The staff is very engaged. I would characterize the engagement as serious, as constructive. The most important thing is making sure that Congress fulfills its basic responsibility to avert default.
Markets growing increasingly wary ahead of the so-called ex-date. Secretary Yellen telling Bloomberg, quote, I don't want to be specific about when we do updates, when we think we have more information, but certainly within the next couple of weeks. Joining us now from D.C. is Bloomberg's Kayleigh Lyons. Hey, Kayleigh.
Hey, John. Well, a couple of weeks. We're expecting within the next 2 weeks because, remember, it is only 17 days from now that, in theory, as Treasury Secretary Janet Yellen said earlier this month, they could fail to fulfill their obligations as early as June 1st. So the clock is ticking toward that deadline. But, of course, the other deadline we are looking at within this week is Wednesday, John, when the president does plan to get on a plane to Japan for the G7 summit, which is why we expect this meeting between him and the big four congressional leaders, of course, most importantly, House Speaker Kevin McCarthy, to take place tomorrow. Now, we understand that staff continued to talk over the weekend. They will do so again today, and they have made some signs of progress, hence the optimistic tone we are hearing from officials from the Biden administration. Things that it looks like potentially there could be a compromise on include energy permitting reform, spending caps, though the duration maybe still has some daylight between the two parties, as well as the idea of COVID funding, unspent COVID funding being spent then in other places. There's also this narrative around work requirements for entitlements. The president, when speaking in Delaware over the weekend, said he does support some of that. He did support it in the past, which is now law. The one exception that he doesn't want to talk about is Medicaid. So we'll see where they can come together. What we understand is off the table is that the Democrats, the White House, do not want to touch the Inflation Reduction Act. So we're starting to see the contours of potentially where some agreement may take shape, John. But of course, the clock is ticking. We don't have that much time left. And remember, the Senate is expected to go on recess for the Memorial Day holiday on Thursday.
Well, right now we've got some soothing words from Brainerd. The staff level talks, they're engaged, they are serious, they are constructive. But Kelly, to your point, are we running out of time here?
Well, time is definitely short, but we know that in Washington, things usually move slowly until you're up against a deadline. And that is really when it comes down to crunch time that a deal is made. And remember, House Speaker Kevin McCarthy himself said he would like to see a deal done this week. So we'll see how much progress they can make in that Tuesday meeting, John.
Kelly, thank you. With the update, Kelly Lyons down in Washington, joining us now to discuss Sam Linton-Brown of BNP alongside Colin Martin at Charles Schwab. Colin, first to you, those words from Lael Brainerd, and great to catch up with you, buddy, as always. The staff are very engaged. I'd characterise the engagement as serious, as constructive. Colin, anything to worry about here?
You know, we are optimistic that something will get done. I mean, we think the risk of an actual default or technical default is pretty slim. That's kind of our base case here. But there are risks, of course. When you look at the broad bond markets, if we want to focus in there, we really aren't seeing too much signs of stress, though. The only area we're seeing is in that really short-term Treasury bill market, specifically with bills maturing in the next few weeks. As you just alluded to, John, I mean, that deadline is coming up pretty quickly. So the number of bills we can actually look at that mature before that June 1st date is dwindling by the day. We see there's a huge premium there, and then we see yields jump based on the small risk, in our view, that you get some sort of deferred payment on those maturing bills. So if we look elsewhere in the market, it's really not showing much signs of stress, as I just alluded to. Credit markets are relatively calm. Treasury yields, intermediate and long term, are kind of in those ranges they've been in. So for now, it seems when you just look at those kind of indicators from the financial markets, it seems like there's some sort of optimism that a deal will get done.
Hey, Sam, to Colin's point, you've got these at-risk maturities pricing in some growing tension, elevated yields in various pockets of the T-bill curve. Beyond that, should we be pricing in any tension beyond that?
I think where you have some asymmetry here, John, is in FX markets. What we've seen historically is that when the debt ceiling is suspended, the dollar actually typically strengthens, and that's because liquidity contracts in the US as the Treasury rebuilds its general account. So I think you have some short-term asymmetry contrary to my structural medium-term bearish view on the dollar, where either you have a scenario in which, as Colin said, and we'd agree, the unlikely scenario, where something goes wrong, that's risk off. In that scenario, the dollar will rally versus equity-sensitive currencies. Or you're in the scenario, the more likely one, where there's an extension, liquidity contracts, and any initial weakness that we see in the dollar amidst an equity rally post that event is mitigated by liquidity contraction. So I think you have some near-term asymmetry both to the dollar and to risk assets on the downside.
Sam, what would the call be on the Treasury market? If it hits the fan, are you buying or selling Treasuries? That seems to be the question we've all got to ask ourselves here. Is it any different this time around? We caught up with Luke Hickmore of Aberdeen on Friday. He said the 5-year. I'm buying the 5-year. Things get messy. That's where I want to be. Where do you want to be?
In fact, we'd have a pretty similar view to the individual you mentioned from Aberdeen. That's a segment on the curve that we think in yield is a little bit high at the moment, and the 5-10s at this level is simply too flat. So on that type of risk-off outcome you mentioned, I'd agree. The 5-year point looks attractive. I think something like 5s, 10s, 30s fly in the US, where you're short the 10-year versus long the 5-year and 30-year, is quite a nice sort of duration-neutral normalization trade that also captures some of these near-term event risks.
Colin, does that resonate with you?
It does. Now, we don't have a specific target on the yield curve or where we would suggest our clients focus on, but we are of the view that we would expect intermediate and long-term yields to fall, sending their prices higher. I think there is a lot of misunderstanding around that, especially among individual investors, kind of a big client base of ours here at Schwab. Why would Treasury prices, especially long-term Treasury prices, rise? Well, as Sam mentioned too, liquidity would be an issue, and even though this would be a short-term default in our view, should it happen, it wouldn't impact, the ability of me or you to receive our 10-year Treasury note maturing in 10 years. So we think the safest, most liquid investments would still get bid up, and we would expect intermediate long-term Treasury yields to fall should this not get resolved over the next few weeks.
In that very specific instant, things aren't different this time around. 23 minutes away from the opening bell, equity futures just about positive by 0.1% on the S&P 500. A little bit earlier on this morning, we had some economic data from the Empire Manufacturing read on things. I have to say, Colin, not tremendous, not terrific. When you think about the debt ceiling showdown, what does this mean for growth going forward from here?
Yeah, it's more sign to us, more evidence that growth is likely to slow and continue to slow in our view. But we have seen a number of these indexes, kind of the regional Fed manufacturing index, point to, slower or slowing growth. Yet the markets are kind of still showing some resilience, and we haven't seen it, resonate into some of the actual hard data. So I think tomorrow will be really important with retail sales, because like I mentioned, these are a lot of manufacturing indexes, but when we look at the consumer spending is still holding up well. It's not going gangbusters, but as long as the consumer is still spending and as long as the labor market is still somewhat strong, I mean, it is showing some cracks, but it's still relatively strong. It seems like that's gonna, be in focus more than these manufacturing indexes that we've seen over the past few months.
I just went through the intraday scores. Equity futures just about positive, but rolling over into the opening bell. Year to date, on the S&P 500 up more than 7%, the Nasdaq up by something like 17%. Laurie Cavacina of RBC had this to say on the debt ceiling standoff and what it ultimately would mean for the equity market. Debt ceiling fears in the US equity market seem likely to provide yet one more catalyst for the large cap growth trade, which has benefited from one catalyst after another already in 2023. Sam, can I go to you on that and just read that quote again? Debt ceiling fears in the US equity market seem likely to provide yet one more catalyst for the large cap growth trade. Sam, would you agree with that?
I think the argument here is that it will keep rates under pressure and in turn support that segment of the equity market. I think the key point I'd make here is sort of bringing it back to what all this means for central banks and for the Fed, because we're in a scenario here where the Fed explicitly has said that tightening credit conditions, any weakening in the equity market that feeds into that, will do some of the work for them. So if we see some weakness in equity markets as a result of the debt ceiling, I think that does some of the Fed's work for them. And that could happen actually in both scenarios. It could happen in a scenario in which something goes wrong. Clearly, we understand the implications there. But I think it could also happen in the scenario that both Colin and I were saying is much more likely, where there is an extension, but liquidity contracts. And that contraction in liquidity causes a bit of a catch down in the US equity market and US credit markets to what we think the fundamentals are suggesting those markets should be trading at.
Equities right now just about positive on the S&P. Let's get you some movers. We can do that with Abby.
Hey, John. Well, one big mover this morning really helping out the major averages. The shares of Meta are climbing this as Loop Capital has upgraded the stock to a buy from a neutral, saying that the revenue trends there are very positive and that this should continue to drive multiple expansion as opposed to the cost-cutting one-time deal. For a stock that's up almost 100% on the year, this is a pretty bold call. On the other hand, Loop Capital is downgrading Alphabet down 1.3%. The AI transition, that creates concerns, and that valuation could remain volatile. This after an up 11% week last week, so taking some chips off the table. And then finally, Sarepta Therapeutics up 25%. The FDA has recommended approval for the company's gene therapy for a severe inherited muscular disease. The stock on the open, if these gains hold, will now be up on the year, John.
Abby, thank you. More from Abby around the opening bell about 20 minutes from now. Colin and Sam are going to be sticking with us. Coming up, Chairman Powell capping off a busy week of Fed speak.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation.
That conversation up next.
large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation. And so this delicate balance has allowed, I think, the consumer to continue to stay afloat, which pushes out our recession call to the end of the year.
Fed officials dominating the calendar this week, at least 11 different officials on the calendar this week, with Bostic, Kashgari, Cook kicking things off today. Our very own Mike McKee speaking with the Atlanta Fed President Raphael Bostic at 2 Eastern. U.S. retail sales coming on Tuesday. All of this ahead of the main event with Fed Chair Jay Powell on Friday. Joining us now from the Atlanta Fed Conference down in Florida, Bloomberg's Mike McKee. Morning, Mike.
Good morning, John. It's going to be a very interesting week because, as you mentioned, there are so many different Fed speakers this week. But it's not going to be about what they say, I think. It's going to be more about what they don't say, the word you don't hear. And I talked to Fed officials in California on Friday, and I've talked to some here already. The word they don't say is pause. They're still considering the possibility that they might have to go higher on inflation because it doesn't seem to be coming down as fast as they want. We got that surprising speech from Mickey Bowman last week, and she is speaking again this week. And the others are all saying, well, you know, you look at the numbers, we're still high, and we are still seeing some inflation in the pipeline, so we're going to be very cautious and not decide till the very last minute. There's also some economic data this week that's going to matter. We already got, as you mentioned earlier, the lousy empire number. We get industrial production tomorrow along with retail sales. We'll see if industrial production ratifies the lousy empire number, and that would scare people. Retail sales, obviously, we want to see if the consumer is still hanging in there. And then later in the week, we get housing numbers, and there's an undercurrent among Fed officials of concern, I wouldn't call it worry, but concern that all of a sudden we're going to see housing turn around. Nobody's selling their houses because interest rates are too high, but prices are still going up because there's no inventory. So the question is, do they get a boost to GDP and a boost to growth and a boost to inflation from housing? We'll watch those numbers as the week goes on as well.
Mike McKee, let's go through the Fed speak together. Bostic, Kashgari, Bostic, Cook, Mester, Barr, Williams, Goolsbee, Logan, Bostic, Jefferson, Barr, Logan, Williams, Bowman, Chairman Powell. Is that enough for you, Mike? What are we looking for from those speakers this week?
Sounds like a very long law firm title. You know, I think Jay Powell probably is going to disappoint people who want guidance on what they're going to do. It's a research conference in honor of the late Tom Laubach, and I think he and John Williams are probably going to be doing more tribute type and more talking about research work. So that may not be the main event of the week, but we're going to have a lot of comment from, as you mentioned, Bostic, Barkin, Goolsbee, Mester is speaking, and these people are going to be ask the question, are we going to see you pause in June? And you can start adding those all up, and you'll get a pretty good impression of where the Fed is right now. There's a couple like Lisa Cook, who's giving a college commencement I wouldn't worry about. But there's also Michael Barr, the vice chairman for supervision, who is going to be speaking up on Capitol Hill, 2 hearings about the banking system. And obviously, people are going to be looking for clues to how the banking system is doing right now and whether the Fed fears another meltdown at all.
Mike, looking forward to your conversations, that's for sure. Mike McKee there, thank you, sir. Sam Linton-Brown, Colin Martin back with us. Colin, I want to come to you on a quote from President Bullard of the St. Louis Fed. He said this: monetary policy is now at the low end of what is arguably sufficiently restrictive given macroeconomic conditions. He said the prospects for continued disinflation are good but not guaranteed. I want to pick up on that first line, Colin. The monetary policy is now at the low end of what is arguably sufficiently restrictive. Do you agree with that?
You know, I think I do. I mean, this is in line with what Bullard's been saying for the past year plus. But when we look at the actual level of the federal funds rate and how much it is or isn't slowing the economy, you could argue that it hasn't done too much yet, absent the home and housing market, of course. And that's what we're waiting to see. Obviously, that's what the Fed's waiting to see based on the changes to their statement. But he's been in the camp yet for a while that they need to get higher. I think it's a step in the right direction that he's acknowledging that it's at the lower end of what he might consider restrictive, but it is in line with him and his fellow hawks that do think there is some work to be done. At Schwab, we think a pause will come. We acknowledge that the last statement stopped short of that. We viewed it as an indication of a pause as opposed to an outright explicit announcement. But when you have Bullard, Kashkari, and then when you have Michelle Bowman talking about the possibility of another hike going forward, there's plenty of voices out there that think the fight of inflation isn't over just yet. So we think they can pause, but if we start to get inflation readings that are coming in hotter than expected, and we don't see those cracks in the labor market that we've been expecting for a few months now, then it is possible they could end up hiking more.
There are all these little disconnects between what the Fed is projecting, what the market is pricing, what the equity market is embracing. Sam Linton-Brown, you are not buying the soft landing happy talk at all, are you?
Well, first off, John, let me compliment you on your ability to do tongue twisters of different FOMC speaker names. Super impressive. But with respect to the Fed, just 3 quick points our side. First is, I think the market will be more sensitive to data than it will to Fed rhetoric. At this point in the cycle, data matters more. We're seeing that in terms of what the market also implies in volatility markets, where the premium attached to central bank events is going down, the premium attached to data is going up. Second point I'd make is that even though the Fed, as we've just been discussing, still have a tightening bias, don't want to use the word pause, and suggest they might still have some more work to do, we're going to have persistent front-end inversion in the curve because the more plausible, larger move in rates from here is down, not up. And that means that even if the Fed do still have a little bit more work to do, it's highly likely that the market continues to price this risk premium attached to lower rates over the next 6 months. Third and final point, the reason the market's quite excited about these steepener trades is because of the point I just mentioned, that if the Fed cut, they'll have to cut quite a lot. The view that we've got here at BNP Paribas and our new head of US interest rate strategy, Will Marshall, has been advocating this perspective. The problem with steepener trades is that if, as Colin was suggesting, the Fed do have a little more work to do, or they want to keep rates higher for longer, those trades are very negative carry. And while you can have a persistent front-end inversion that stays priced, if the cuts aren't realized, you're losing money as those cuts get rolled incrementally forward. So the way that we've been advocating to position around that is to be in the steepener trades, but against it be short US rates vol, which can only be justified at these levels, in our view, if you do have a hard landing.
Colin, what would you say back to that?
Well, I want to touch on a point that Sam made that we agree with, where he alluded to when the Fed cuts, it might be large cuts, right? And the Fed only needs to cut or will only cut if they need to. And that's a point we've been talking about. So if we look at rhetoric from Fed officials, their dots versus what the markets are expecting, we tend to lean more towards the Fed, although we'll acknowledge that if inflation does come down and we start to see more cracks in the labor market, maybe we can see cuts this year. But as it stands right now, with inflation still 4% plus when you look at core readings, and a labor market that's still relatively strong and an unemployment rate still at 50-year lows, the bar seems pretty high for a cut because the Fed has told us they want to kind of hold and see what the lagged impact of all these hikes are. So given all that, we don't think they suddenly want to do something to stimulate the economy or potentially stimulate the economy if inflation is at still 4% or more. So that's been our case for a while. But again, we do see the risk of cuts if we see that disinflationary trend maybe pick up a little bit and we start to see more cracks in the labor market. We started to see a little bit with initial jobless claims, but again, one indicator, 1 week doesn't necessarily make a trend.
True. Looking out for claims again this week. Colin, Sam, to the two of you, thanks for joining us. As always, looking ahead to another read on the US consumer this week, with retail sales coming tomorrow, later in the week earnings from Target and Walmart. This is what Mike Gapin of Bank of America had to say on a consumer and the credit card data they track, the card spending data at B of A. So far, the card data point to a relatively benign consumption slowdown and few signs of bank stress weighing on spending. That's the latest take from B of A. A lot of people sharing that view at the moment. We'll pick up on it a little bit later. Coming up, the morning calls, and later, preparing for a pause. BlackRock's Gargi Chowdhury telling equity investors to go for growth. That conversation around the opening bell. Your opening bell about 7 minutes away. Equity futures positive 0.16%.
We can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Minutes away from the opening bell, coming off the back of a very small week of losses on the S&P 500, trying to bounce back by just 0.16% on the S&P, going into the cash open. That's the price action. Let's get you some morning calls. First up, Loop Capital upgrading Meta Platforms to buy. 320 price target, growing increasingly positive on the company's revenue outlook. Deutsche Bank upgrading DuPont to buy, $80 price target, highlighting the stock's attractive valuation after underperforming its peers. That stock is positive by a little more than 3%. And finally, your third call from Bernstein, upgrading Tapestry to outperform, pointing to strengthening China demand and improving inventory levels. That stock up to 42, positive by 2% in the pre-market. Coming up, BlackRock's Gargi Chowdhury expecting a pickup in volatility as the Fed prepares to pause, and why this growth trade might continue to deliver. That conversation just around the corner. Your opening bell up next.
maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Let's get your trading week started. About 22 seconds away from the opening bell this morning. Good morning to you. Equity futures positive by just 0.1%. Coming off the back of a couple of weeks of losses on the S&P. Let's see if we make it 3. Going into retail sales tomorrow and a ton of Fed speak through the week. Let's see opening bell, switch to the board and get to the bond market. Yields looking a little something like this in the Treasury market. We reclaimed 350 on a 10-year, up by 3 or 4 basis points. In the FX market, a euro, 108. 108.79 only a couple of weeks ago, came very close to 111. Backed off since then. Last week, biggest weekly drop on euro dollar, going all the way back to September of last year. In the FX market right now, the euro against the dollar positive by 0.3%. Crude up by 70 cents right now to $70.80. We're up by about 1% on a session at the moment. About 26 seconds into the session, your broader equity market on the S&P 500 looks like this. We're positive by 0.1% on the Nasdaq. No drama here this morning, up by 0.1% as well. Kicking off the new week with plenty of M&A news. Newmont securing a $19.2 billion deal for its Australian rival Newcrest Mining, plus Wano agreeing to buy Magellan for $18 billion, creating one of the largest oil pipeline operators right here in the U.S. Abby has more. Hey, Abby.
Hey, John. Yeah, well, we do have these 2 commodity space deals on this Monday, so some M&A action for commodities. Starting off with the Newmont deal, that $19.2 billion purchase of Australian rival Newcrest Mining. Now, this will cement Newmont's position as the largest gold miner in the world. The deal is pending regulatory approval. It's the gold mining sector's largest deal to date, larger than the Goldcorp purchase by Newmont back in 2019. Gold up more than 10% this year at an all-time high, suggests that Newmont thinks more gains ahead. Now, as for ONIAC, they are buying Magellan for $19 billion, an energy pipeline deal. The agreement should create one of the U.S. Largest pipeline operators. It allows them to expand into oil and fuel transportation. A cash and stock deal, a 22% premium. It's really interesting, John, because Magellan up just 14%. That suggests some folks may think that there are some issues, maybe on the regulatory side, to getting this deal done at the end of the day.
Abby, thanks for that. The latest there for some of the mergers and acquisitions this morning. Some activist action in the food industry. Shares of Shake Shack moving higher on a Bloomberg report that activist investor Engaged Capital has taken a stake with plans to push for changes on the board. Kaylee Lights has more. Hey, Kaylee.
Hey, John. Yeah, Shake Shack up more than 5% here in the first few minutes of trading. We understand that Engaged has a 6.6% stake in the company and is looking for 3 board seats in this proxy fight. We understand that they actually wrote a letter to the board of directors back in March detailing the proposal for new directors as well as other changes to boost the stock price. Mind you, the stock is with these gains today, now up more than 60% year to date, up by 25% in May alone, as it was boosted not just by this report, but also positive results earlier this month. Look out over the longer term, though, John, and you see a very different story. Shake Shack is still trading at roughly half of the levels of its all-time high from back in February 2021, down more than 45% since that time. That is dramatically lagging some of its restaurant peers, which are up about 20% over that same time period. So in theory, engaged here trying to help Shake Shack play catch up, John.
Kaylee, on the latest, Shake Shack right now up by more than 5%. Looking at the financials, we focused a lot on it for good reason since early March. The regionals, the KRX regional banking index from KBW hammered last week by more than 6% this morning, just about positive by 0.25%. Big week ahead for the banks once again. The National Economic Council Director, Lael Brainerd, attempting to soothe those fears ahead of congressional hearings on Capitol Hill this week.
The environment has changed a lot over the last few years, with interest rates going up by a large amount. And banks, several banks that have now failed and been taken over by healthier banks, didn't manage their risks. Right. Those were isolated problems. But of course, we're all monitoring the situation very carefully. But we have the tools. We've taken strong actions. The system overall is sound.
Hey, Shonali, they all get sent the same script, don't they? It just reads, the system overall is sound.
That certainly is the script that we're listening to. And of course, you're watching the investors across the board see if that is true. You were talking about the KBW Bank Index. Coming out of last week, there were barely any stocks in that index that were in the green on the year, John. And if you looked at the only things that were really flat to up, it was Citigroup and JP Morgan, everything else in the red. So if you take a look at the green that we're looking at the screen right now, there are a few things. Schwab in particular, you're looking at again another day of gains here, after saying late last week that really the position there is stabilizing when it comes to deposits. They have about $13 billion in net new assets last month. Can they continue that stability? You are seeing them still down more than 40% on the year into this morning, but you are seeing another day of gains. Now, PacWest as well, we know that this is a bank that has seen a lot of pain in the last 2 weeks. Is the position there stable? Now, when you look at how the Fed speakers are looking at this, is the banking system stress enough to really show you more strains in the economy? When you're looking at the credit crunch, you are certainly seeing signs of cracks, but you're also seeing some signs of optimism. Still a little too early to tell where this goes from here. Certainly no banks, as we're looking at it right now, in kind of danger territory.
Shonali, looking at Schwab, it's positive this morning by more than 3%, and there's a Southside research call I'll get to on that in just a moment. But Shonali, why did this name get dragged into this mess of the last couple of months?
Well, think about just how volatile the assets have really been. Think about how volatile the stocks have been. So some of this was sentiment dragging things down more than maybe it otherwise would have. But let's be clear here. Schwab turned into a bank. In fact, it had several banks here that were definitely very investors were very concerned about the interest rate risk that was baked in here as they changed strategy so rapidly in the last couple of years. I like how Torsten Slok had put it. For so many years, higher interest rates were seen as such a good thing for banks. But when they rise this rapidly, we've seen that that is certainly not always the case.
Shonali, thank you. Schwab back at 50 in early trading and positive by a little more than 3%. There's that call from the likes of Raymond James on Charles Schwab, upgrading the name to outperform and rounding the following. Recent data indicate that client cash sorting at Schwab is tapering. Concerns about the stability of the banking system have not impaired its ability to attract new accounts. And as a result, we see deposit balances stabilizing starting in the third quarter of this year. That name at 50-50. We're positive there by a little more than 3%. Joining us now to discuss, I'm pleased to say, is BlackRock's Gargi Chowdhury. Gargi, wonderful to get you on the program with us as always. You put this in your recent outlook. Here's just a snippet of it. I'm going to share a quote with the audience that investors may want to consider stepping into high-quality, medium-term fixed income.
Connection
For equity
lost.
investors, we prefer growth companies with a strong quality tilt, high returns on capital, margin stability, and solid balance sheets with reasonable valuations. Now, Gargi, does that just take me over to tech and to the big growth mega-cap names on the S&P 500?
Good morning, John. It's great to be here. Thank you for having me. And it's a little bit of the higher quality tech names for sure. But when we think about quality companies, think about companies that actually have that margin resiliency, that pricing power, that earning stability. It doesn't just have to be tech. And I think that's where we often get confused. We think growth, we automatically think tech. But what our work shows that, yes, it can be some of the tech names, but it can also be sectors like energy, especially global energy companies that do have that tremendous amount of pricing power as well as margin safety. So, as we sort of think about what's to come next, which we view as a pause, the Fed is getting ready to press that pause button. We'll find out more in June. We think quality should remain the focus, both in the fixed income markets as well as the equity markets.
Gaki, one thing that you've said is that a pause is not a pivot. Can you draw the distinction in how you would trade accordingly?
Of course. What the markets are pricing in now when we look at the Fed funds futures, and we see this even after the CPI print and the Michigan number, is that there are going to be some rate cuts by the end of 2023. Now, when we look at what we got in CPI, there's some good news there for sure. We are seeing that deceleration in shelter inflation in rents and OER, and that's excellent news for us as investors and certainly for the Fed. But at the same time, we're still seeing inflation remain on a year-over-year basis at 5.5% on core CPI. And that is not a world in which the Fed is going to jump to cut rates. So the pivot that the market has been expecting and has expected in the past is this idea that we get rates to that very restrictive level, which is where we are now, call it 5 and 8%, and then pivot to cutting rates. And we've seen that price action happen over and over again. And our view here is that a pause is exactly that. They stop here for some time. How long could that be? Certainly till the end of that year. Maybe after that, in the first quarter of next year, they can revisit where inflation is, where core services ex shelter is, and make a decision based on that. But for now, for the market to get ahead of themselves and expect for rate cuts to come as early as July seems a tad bit optimistic given the inflation backdrop.
And Gaki, given what you anticipate, is that good or bad news for this bond market, for Treasury specifically?
The bond market, it's interesting. That we've been talking about this concept of moving away from TINA to BARB, which is, of course, bonds are back. And what we mean when we say that is bonds are back as an income to your portfolio, but more and more bonds are also back, especially if we step out of duration just a little bit into sort of the 5-6 year part of the Treasury curve and look at something like the AG. We do think bonds can also be that diversification in your portfolio. Now, having said that, I know the two things that I just said don't go very well together because we are expecting a little bit of that cuts to get priced out of the market. So what I would say is, number one, focus on the cushion, the yield cushion that the bond markets have. And what I mean by that is that even if interest rates move up by about 70 basis points over the next 12 months, we can still have a positive return being invested in things like the AG. So that's one thing that the investors should focus on. And the second thing, and this is a big departure from how we were viewing the fixed income markets or the high quality fixed income markets from 2022 to 2023, is that right now, any backup in yields should be viewed as a buying opportunity. So right now, sitting right around 350, maybe we can wait to get back to sort of that 360, 370 if we even get there. Obviously, if we get back to the low end of the range, which was 3.3% on the 10-year Treasury, I would sort of steer away a little bit. But view any backup as a buying opportunity because you do have that incredible cushion in the bond markets that wasn't available to you just 18 months ago.
Gaki, is that true right across the curve or only applicable to certain segments of the curve?
I would certainly keep those allocations sort of in the very front end because you do have that inversion of the yield curve. You are earning a lot of coupon and carry in the very front end. So owning things like sort of SHY in the fixed income bond ETF markets and all the way out to sort of the 6-year part, so going out to the AG, I think that would still make sense, which is about a little over 6 years of duration. Where I would steer away from is the very, very long end. So 30 years or 20 plus years, I still think that we could get that steepening. I do think we could see a little bit of a yield move higher there. We have expected some inflation risk premium to come back into the markets. That certainly hasn't been the case. But I'm not giving up hope on that yet. So definitely step out of duration, certainly step out of cash. Look at the 2 to perhaps even the 6-year sector. I would steer away from the very, very long end, because I think that there could be a repricing higher in yields there.
Seeing that this morning, curve just a little bit steeper, led by the move at the long end. Gargi, thank you, as always. Always a pleasure. Gargi Chowdhury there of BlackRock. Your 30-year higher by 4 basis points. The yield on that is about 383 on a 10-year higher by 4 basis points also, reclaiming 350 at the very front end of the curve. 2s out to 30s, looking at the 2-year there, up by about a basis point and back through 4%. For the broader equity market, about 12 or 13 minutes into the session, we are totally unchanged on the S&P 500 to start off the week. On the Nasdaq, we're positive by 0.2%. As I've indicated a few times this morning, retail sales tomorrow, later in the week. Another read on the US consumer, looking at Target, looking at Walmart. Coming up on this program, Turkey's leadership hanging in the balance.
This week, many in the U.S. and really in the U.K. and across NATO are watching Turkey's elections very closely.
The presidential vote going to a second round. That conversation up next.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This week, many in the U.S. and really in the U.K. and across NATO are watching Turkey's elections very closely. Those will likely be going to runoffs later on this month. Turkey, of course, being a key member in NATO, and a shift from Erdogan's power really could change how that relationship looks in terms of Turkey's relationship with Russia, with Ukraine, and also with expanding NATO. So I think that's where a lot of eyes are on right now.
A little bit of turmoil in emerging market economies. Turkey holding a runoff election in 2 weeks after President Erdogan failed to secure victory with Sunday's vote. This as Argentina prepares to unveil a set of emergency measures, wait for this, including a 600 basis point rate increase. The move would raise its benchmark rate to 97% as policymakers look to stem currency losses and inflation running at above 100%. For more, Bloomberg's Patrick Gillespie joins us now from Buenos Aires, alongside Damien Sassow here in New York. Damien, first to you, the latest news in the last hour. We're going to a runoff, a second round.
Yeah, I mean, Jonathan, do you remember back in 2021 when the AKP deputy responded to 50-60% inflation in Turkey by saying he suggested that they actually eat less? Well, guess what? The AKP is here and here to stay, it looks like. It looks like Erdogan's positioned to win the runoff in 2 weeks' time. And so, you know, Kılıçdaroğlu and the CHP, which is the centrist party, has made a good effort here. And we'll see what happens. But, yeah, I mean, Erdogan has 9 lives, and it looks like we're going to see number 10.
Damien, we've seen the market reaction. Initially, equities down. There was some talk going into this about whether we'd move away from the unorthodox approach to monetary policy in Turkey. Any reason to believe things are going to change, Damien?
Well, the interesting thing here is the spillover to EM is going to be limited, to say the least. I mean, we're talking about foreigners owning something on the order of 25 billion of Turkish stocks and bonds. That's down from 150 billion 10 years ago. I mean, it's going to have a minimal impact, but to your point, yeah, you know, we can't expect to see a quick rush to economic orthodoxy in Turkey, and even if there's a change in power, just because structurally speaking, it's going to be a challenge.
The economic situation in Argentina here to make Turkey look good. Patrick, let's talk about these numbers. It's unbelievable. 97% interest rates, inflation above 100%. How bad is it, Patrick?
Good morning, John. We're going to face another volatile week in financial markets in Argentina here. Inflation on Friday hit 109% annually. That's the highest in 30 years. Goes high since 91, since Argentina, at that time, Argentina was battling hyperinflation in the early 90s and late 1980s. That prompted, those numbers on Friday prompted the government over the weekend to put out some emergency measures, including a 600 basis point rate hike to 97% on the benchmark rate. They're also announcing more FX intervention in parallel markets and also on the official rate. So it'll be really interesting to see how much they'll let the official rate devalue and how much they're going to intervene on the parallel rate. Of course, all of this is happening before the presidential election in October, which feels like a long way away when we're dealing with 1 week after another of high inflation, high price hikes, volatile currency moves, and a lot of uncertainty.
Patrick, you're living it. Can you tell me why we're always doing this in Argentina? There always seems to be something.
I wish the answers were easy, but I think the diagnosis is a lot easier, John. It's constant deficits, it's lack of credible policy making, it's overspending, it's money printing, and in other cases, it's over-indebtedness. So the country is in a constant cycle between one crisis to another of over-indebtedness, overspending. I think at the root of this is a huge public sector here that's causing deficits in Argentina, and those deficits need financing and debt. Argentina has no access to international debt markets right now, so they have to print money, and that's only going to create more inflation in the near term and the long term. But I think everyone knows that things have to get worse before they get better in Argentina, before things stabilize.
Well, Damien, things are certainly getting worse. What's your take on this?
I think fundamentally the drought is really hurting things. I mean, it's depriving the economy of much-needed dollars offshore. I mean, corn, wheat, and beans. So, you know, the fact that you have this drought has really been a bad thing. And I think you've just seen from late March to late April, locals removing $1 billion of dollar deposits within Argentina. So, I mean, it's an economy that's starving for dollars. And the blue chip swap rate, which is the parallel rate, is down 35% year to date.
Damien, 97% interest rates. I don't want to gloss over it. 97%, and Patrick just went through the inflation number from last week, north of 100%. Patrick,
it doesn't really help.
Go on.
Yeah, I was just going to add that the monetary policy tightening here, this is a very cash-focused economy. So when you raise interest rates, it doesn't have that effect that it might have in a more advanced economy like the U.S. or in Europe. Mortgages are more or less non-existent in Argentina. So hiking rates only provokes a sort of a desperation sense in the country, and people start to, remove dollar deposits as they did by $1 billion last month, and really take matters into their own hands. But there is certainly a boiling and brewing sense that Panic is on the rise here, and people are worried about the prospect of potential hyperinflation.
Damien, I just want to give you the final word on all of this. What is the solution to what's happening in Argentina?
Well, it must be amazing, Patrick, getting up every morning and figuring out how you're going to convert your pesos into dollars just so you can, eat and pay for necessities. But I mean, for me, it's going to be about the elections in October. Patrick will probably know more about this than I will, but Patricia Bullrich, who seems to be leading in the polls, is proposing something along the lines of a bi-monetary policy, more of a dollarized economy, such as the lines of we've seen in Uruguay or Peru. And so I think that is probably in the works at some point down the road. But my goodness, the $44 billion IMF package that needs to be reworked, I mean, we need to get there. We need to get there sooner rather than later.
Just amazing to the two of you. Thank you. Patrick, no doubt we'll catch up again soon. Patrick Gillespie there, Damien Sassa, two of the very best on EM right now on both Turkey and Argentina. Just a little bit of turmoil, I think, putting it into some perspective for us here in the United States going into this debt ceiling drama. 23 minutes into the session, equity markets down by 0.1% on the S&P 500, just working through the Bloomberg for you. On the NASDAQ, just about unchanged, and the bond market yield still just a little bit elevated on a 10-year by 3 or 4 basis points, 350, on a 2-year up a single basis point, and just south of 4%. Coming up on this program, we'll get you the Trading Diary.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Almost 26 minutes into the session this Monday morning. Good morning. Just about negative on the S&P, down by 0.16%. That's the price action. Big week ahead. Here's the Trading Diary. Atlanta Fed President Raphael Bostic speaking with Bloomberg, 2 p.m. Eastern, sitting down with Mike McKee. Don't miss that. Governor Lisa Cook, a little bit later this afternoon. Tons of Fed speak this week. I'll bring you some of that through the week, no doubt. President Biden and congressional leaders expect to resume debt ceiling talks tomorrow, plus retail sales, the Senate Banking Committee holding its hearing on SVB, and Tesla kicking off its annual shareholder meeting too. We round out the week with jobless claims, plus Biden attending the G7 Leaders Summit over in Japan, and Chairman Powell speaking on Friday. From New York, that's it for me. Thank you for choosing Bloomberg TV. This was the Countdown to the Open. This is Bloomberg.
technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi.
Connection lost.
And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the